Eastern Africa and Central Africa, and now the whole of Africa, Middle East, and Asia. Many years ago, we were in Eastern Africa and Central Africa, and now the whole of Africa, Middle East, and Asia. Strength and wisdom beyond borders. Kenya, reinsurer of choice in the region. Kenya, strength and wisdom beyond borders. Kenya, reinsurer of choice in the market. Kenya, many years ago, we were in Eastern Africa and Central Africa, and now the whole of Africa, Middle East, and Asia. Many years ago, we were in Eastern Africa and Central Africa, and now the whole of Africa, Middle East, and Asia. Stable and dynamic, modern, competent, and professional. Stable and dynamic, innovative, competent reinsurer. Many years ago, we were in Eastern Africa and Central Africa, and now the whole of Africa, Middle East, and Asia. Many years ago, we were in Eastern Africa and Central Africa, and now the whole of Africa, Middle East, and Asia. Stable and dynamic, modern, competent, and professional. Stable and dynamic, innovative, competent reinsurer. Many years ago, we were in Eastern Africa and Central Africa, and now the whole of Africa, Middle East, and Asia. Many years ago, we were in Eastern Africa and Central Africa, and now the whole of Africa, Middle East, and Asia. Asante sana. Thank you.
Of a rich diversity of
Thank you very much, the choir, for that wonderful presentation. Ladies and gentlemen, we want to begin our program, and I'd like to say Kenya Board Chairman, Honorable Catherine Kimura, Kenya Board members from Uganda, West Africa, and Zambia, our Group Managing Director, Dr. Hilary Maina Washinga, partners present, CEOs and managing directors present this morning. Welcome to our second day of this wonderful summit that began in earnest yesterday. Now, to start us off, ladies and gentlemen, I'd like to invite our managing director, Dr. Hilary Maina Washinga, to come here and address us briefly. Thank you. Thereafter, I'll hand over the program to our able MC, Mr. Larry Asego.
Good morning. Jambo. Bonjour. Bonjour. I'm learning. Eh? So again, welcome once again to day 2 of our first ever CU Summit. I hope you had a good night. I hope Kenya is treating you well. We have perfect weather, perfect conditions for this summit. So now, before we start, we thought it good to hand over a very special award to our boss. So yesterday, Kenya Re was awarded a global award. We were given the best retakaf window globally. Okay? This was at an event in Maldives, hosted by GIFA, that is Global Islamic Finance Awards. And this award, again, it has a wide spectrum of the financial services. So they look at banking sector, they look at insurance sector, and all other players in, in that space of Islamic financing, all other players, and they award them accordingly. So we competed with the best, and we merged the best. And we thought it good for you. These were the news that I withheld last night. These were the secrets we withheld last week. So we agreed today in the morning before we begin. I think it's only good to give our boss that award. So I'll be requesting Omar Mohammed. I can see you. Yeah, Mohammed, welcome. Welcome here. So Chairman, also, you may come. And Director Sharo, you may come. We want to hand over this special award to you. And this is a testament that this segment is really growing. It has grown by 99% by half year this year. It's so fastest growing and quite profitable. So Mohammed, welcome. So Chairman, I'll be requesting you to come and receive this award.
So ladies and gentlemen, this is a very prestigious award, and I think you saw earlier a list of other recipients of this kind of award. So it's not just an award that is given to everybody. It's an award that has been celebrated by presidents, heads of states, prime ministers. So it's a very, very prestigious award, and we are very glad that this award has found its way to the Kenyan soil. Asante sana. So I think that deserves a big round of applause. Congratulations. And as you can see on the screen, that's just a list of some of the recipients of these awards, just to show you the caliber that is required for us to be able to bring this home. So congratulations. It is indeed a very big, big achievement. Thank you very much. I think that's a good note to start the day on. By receiving an internationally acclaimed award. So now we're moving on to the first part of our program, and before we get started with the first panel, I'm going to be calling the chairman of the National Chamber of Commerce just to say a few words. Said Ali, just to come and at least take like 4 or 5 minutes just to tell us what kind of day this means to not only Kenya but to the chamber as well. So if you can have the chairman of the National Chamber of Commerce. I think it was in the room somewhere. Yes? Okay, I've been told that he just stepped out, but we have Ms. June from the Kenya Tourism Board. We missed you yesterday, and I know that you are present today, and I know you're going to be speaking a bit later on. But since we enjoy a lot of partnership with the Kenya Tourism Board, and also we are going to be enjoying a lot more partnership tomorrow morning, I think it's only in order for maybe you just come and say a few words before we get to your panel. So karibu sana. Welcome. Let's give a round of applause as she comes on stage. This is one of our most prestigious institutions in the country, and we really appreciate your presence here today. Karibu.
The chairman, board of directors, leadership of Kenya Re, guests, invited, visitors, tourists, friends of Kenya, good morning. Thank you for the ambush, Larry. My name is June Chepkemei. I'm the CEO of Kenya Tourism Board. Kenya Tourism Board is responsible for promoting this great destination called Kenya. We are proud to live in a country that is blessed with diversity. We are the only country that allows you to experience Savannah grassland. We are the only country that allows you to experience the tropic. We are the only country that allows you to experience the mountains. Kenya is the only country that allows you to experience the Great Rift Valley. It's only in Kenya that you experience desert safari in the northern part of the country, as you also enjoy stargazing due to the perfect climate and weather there. We are the only country that allows you to experience the beach. We are a country that when you visit, you've already visited every single part of the globe. So count yourself blessed this morning to have visited the globe by just being in Kenya. We are not just an amazing destination, but we are a destination that promises return on your investment. And that's why you are here today, isn't it? It's a great country to invest. We have continuously demonstrated resilience amid the challenges that we faced as a nation. We have demonstrated that we have an active, hardworking young people. 70% of our population are below the age of 35. Hence, you're finding CEOs below the age of 40, like myself standing here, a great testament that this is a country of talent. So if you're looking to invest in the future, you are in the future because Kenya is the future. I want to believe that you've enjoyed your session in this great convention, but I would wish to invite you to experience the magical Kenya as you experience the vibrant city of Nairobi, the only city that also provides a national park where you engage with wildlife in real time. You don't need to go to a zoo. We have a museum a few kilometers from here, the only museum in the world that has the remains of the latest human. Hence the reason scientifically we have been identified as home of human origin. So for those of you visiting, we are here to welcome you home, and feel free to stay at home and always come back home because you don't need permission to be home. So we'll look forward to having an engaging session as I come up in the panel, but just to really assure you that Kenya is the place to be, and this is your home. Tembea Kenya, visit the magical Kenya, meet the amazing Kenyan people, and experience the over 50 million smiles. Thank you.
Thank you very much. And of course, we are going to be moving straight into that panel. But to set the tone for this particular panel, I'm going to be requesting the presence of Director Kenya Re Insurance Corporation. We've seen him earlier on in the past day, but he's going to be setting the tone for us on the topic of entrepreneurship and sustainable insurance. And I'd like to invite our keynote speaker, Mr. Omar Shalo, to come and set the tone for us, even as our other panelists get ready and pick some key pointers here. That session is going to be moderated by Mr. Charles Kariuki, and I'm going to be giving you his bio in a short while. Karibu sana.
Thank you very much. Good morning once again. Good morning. Well, we'll be talking about entrepreneurship and sustainable insurance as one of the main agendas of today. So we'll just start by the introduction of this speech and have an overview, the objectives, and the key topics. And from the overview, the convergence of entrepreneurship and sustainable is in reshaping the industry includes insurance, entrepreneurs, and the key drivers of innovation and the sustainable goals that we need to be discussing today. We're going to look into the objective of the same items, and that's going to have a discussion on the entrepreneurship strategies, and out of that item also the highlighting the dual goal of growth and sustainability and why we both are crucial for the future. And lastly, the key topics that we're also going to have a discussion about today on sustainable development through innovation, entrepreneurship as a catalyst for change in insurance. So we're going to go to the second item on this as well, where we're going to have the role of entrepreneurship in sustainable development. And on the first item is the innovative solutions that we need to enhance. So entrepreneurs are uniquely positioned to create opportunities and services that will solve the society and the challenges of sustainability. We can give 3 examples on the same. And the first example is Kenya Reinsurance as a key example. The second example is Tesla. And the third example is the Lemonade Digital Insurance, BIT. So under Kenya Reinsurance Corporation, we do bring the risk down. So risk deduction on agriculture insurance covers the name peril, multi-peril insurance, and we also ensure the food stability on that item. The second one is on the Tesla item. This is a very good example, and the leading electric vehicle revolution and promoting the renewable energy on the Tesla item. And the third one is the Lemonade. So the innovative insurance model donating unused premiums to social causes. So all this combines the profitability and social impact through transparency and technology. So what are the impacts that we are going to learn out of these 3 items? So the sustainability, entrepreneurship contributes to long-term benefits that you're going to have, and this business attracts investors focused on sustainability, social responsible, including the SRI. And just to further on that, understanding sustainable insurance, we'll just give a quick definition of understanding sustainable insurance. And one of the items is the definition, of course, which sustainable insurance refers to the insurance practices that accounts to the environmental, social governance. And all of this aims in protecting against the climate risk that we're facing as a nation and the natural disasters that we're also facing and the unsustainable practices. Secondly, we will go to the principles, I believe, and from the principles, we are going to also look into the benefit of the same item. And from the principle, the environment and social governance factors that we are engaged in, and also aligning with the international framework like the UN Principles for Sustainable Insurance, which stands for the PSI. And finally, the benefits that are going to be faced out of all these items. We're going to have reduced long-term risk exposure for insurance. And the other benefits that you're going to have is that we're going to have a strengthened trust with environmentally conscious customer. And the third benefit would be compliance and emerging regulations around sustainability reporting and climate risk. So after this item, we'll just briefly go to the 3 categories, the role of entrepreneurship in sustainable development. We're going to see that we have 3 colors that are differentiating the 3 different aspects. From the role of entrepreneurship, I believe it's the other slide, kindly. Yeah, that's the one. So the green insurance products, just by the green item, we do have the coverage designed to support renewable energy, the project's energy, effective homes and green business, policies and incentive lower emissions or offer discounts and eco-friendly practices, electric vehicle insurance. On this bit, it's how do we really promote going green? How do we save our globe? And how do we give discounts on anything to do with the green energy and lowering emission in our item? So the second one is the technology integration. The use of AI is one of the biggest advancements that we have ever come across, and it's changing the world in a very fast pace. So the use of AI, Internet of Things, in the real-time risk monitoring. For example, we do have floods, sensors, wildfire, and tracking. With AI, all this can be made possible in foreseeing the challenges and the risks that we are facing as a whole. So the data analysis to assess climate risks, automated sustainable insurance, that's the second one. And finally now, when we talk about our customers, what is the expectations from the customers? We're dealing with a very different clientele, and their expectations are definitely enormous. And how are we really going to make sure that we satisfy our customers, make sure that we have transparency and we prioritize the option industries, including insurance, and there is a growing demand of both transparency and ethical practices, and we as the insurers need to make sure that that is all implemented. So just on the other item, we're going to touch on entrepreneurship driving innovation of insurance. Entrepreneurship, the risk item, and insurance goes hand in hand, because definitely entrepreneurship is all about taking risks. And taking risk is our business as reinsurers and insurance firms as well. So the case studies of insurance tech startups, we do have an example of Lemonade again, where Surplus, the digital-first insurance on focus on transparency and the donation so that we can minimize the fraud bit, the use of AI for quick claims processing, which is going to fasten the time on that, and we're going to provide coverage for single item service and micro services. The technology driving innovations, so we do have the blockchains, the AI data, insights, and we do have the peer-to-peer insurance on that item as well, just as they've been mentioned, and the content is just underneath there. The innovative strategies, we have the Agile Methodist and the failure as learning. When it comes to the failure as learning, we learn as we go. And this is a very good example of the setbacks that entrepreneurs have, and keep on learning while you're moving forward, and it's an item that keeps on building as time goes by. So we're going to look closely into the challenges before we wind up. And the challenges and opportunities and strategies are the three items that we need to make sure that we look into. So regulatory hurdles are one of the challenges. The sustainability reporting and compliance with the ESG framework can be complex. The market acceptance, the traditional insurance markets be slow to adapt to the new green. The new green, not everyone has adapted to it, so this is one of the challenges that you're facing, but I believe that you're heading there, and with the advanced world, we are moving at a very good pace. The scalability startups often struggle to scale sustainable solution to a global level. The second item is the opportunities that have been created through this. So the emerging markets, we do definitely have rapid growth and developments. We have the technological advance and the partnership as well, where we are going to have collaborations between established insurance and startups to create more comprehensive and innovative solution. And finally, when we come to the strategies, we're going to collaborating with regulators and policy to encourage a smooth transition and sustainable insurance building partnership across industries to integrate diverse sustainability solutions. So We'll come up with 3 items that are supposed to take us to the future. And one of the items that you're going to look into the future outlooks and trends. So it's going to be broken down to 3 items as well. And the emerging trends, the strategic recommendation, and the overall vision on what needs to be achieved. So the emerging trends: increased regulatory pressure on the insurer to disclose climate risk, and make sure after the growth, we do have a rise in demand for micro insurance, especially in vulnerable regions affected by climate change. Climate change has really proved to be one of the biggest challenges for the future. So it is definitely going to be part of this conversation. And the second one is the strategic recommendation that have been proposed from CEO: adopt a proactive, sustainability, innovative, continuously, and form partnership across industries. And the best practices: prioritizing digital transformation, leverage data for economic, social, and governance reporting, and foster a culture of sustainability with insurance with the organization. So to finalize on this is on the vision that we do have. The insurance industry must lead by example. So this is to all of us as the insurance as the insurance firms. We need to lead by example in protecting both the planet and profits. Entrepreneurs will be key to driving the innovation, transforming how insurance adapts to climate change and the social needs. So we will call to a conclusion of all this. And in summary, on what we have just discussed as a whole, we do have 2 items that we're going to tell. The sustainable insurance is not just a trend, but a necessary evolution of the industry. Entrepreneurs are vital in driving innovations and creating resilience, future-proof insurance products. The insurers that integrate sustainability into the core strategies will gain a competitive edge and secure long-term growth. And to wrap it up, we do have a call to action. So as leaders, we should prioritize sustainability in their growth strategies and foster collaboration with innovators and entrepreneurs. And that is the submission. And thank you very much for listening, and I will hand over to you. Be blessed. Have a great day ahead. Thank you.
Thank you very much for setting that tone. In case we've got questions, we're going to be taking them just after the panel. And now I'm going to move straight to the panel that is going to be led by Bwana Charles Kariuki, Corporation Secretary, Kenya Reinsurance Corporation Limited. I'm going to ask him to join me on stage. Mr. Kariuki is the manager of the legal department and serves as the secretary on the board of Kenya Re. He joined the corporation on July 10th, 2013 as the manager legal, and prior to this, he held a similar position at the National AIDS Council, and he's an advocate at the High Court of Kenya with over 10 years of standing, and he holds a Bachelor of Law degree from Moi University, a Diploma of Law in the Kenya School of Law, and is a registered certified public secretary. So Karibu Sana, and I'm going to let him at least introduce his panelists and call them up on stage. Karibu.
Thank you, Larry. Thank you, everybody, for turning up. I don't want to go into protocol and those things, so let me first say I acknowledge all of you from the board in Kenya, Zambia, Uganda, Cote d'Ivoire, and all our guests from across the world. Our panel today, I think I'll call them one by one. The first panelist is Mr. Ashok Shah. You can come up on stage. Mr. Ashok Shah is the CEO of the Apollo Investments Limited Group. He has over 40 years experience in insurance. He majored in applied chemistry from Kingston University in the UK, and is a chartered insurer by profession. He's a member of the Chartered Arbitrators. He holds directorships in Barclays Bank, CDSC, Apollo Life, Apollo Asset Management, and he's a recipient of the Think Business Lifetime Achievement Award for his contribution to the insurance industry in Kenya. And he's also involved in many social activities. So ladies and gentlemen, help me to welcome Mr. Achoksha. Our second panelist is Mr. Agri Mulumbi. We can find his way to the podium. Mr. Mulumbi is the chairman of Bank Assurance Association of Kenya, and is also the managing director and principal officer of Kenya Commercial Bank, KCB, Bank Assurance Intermediary Limited. He has served as vice president, head of bank assurance, principal officer, and executive director at Barclays Bank. He formerly worked as the general manager life at Jubilee Kenya, and he was responsible for growing the portfolio there. He also served as the general manager and principal officer of APA Life Assurance, and is also a past director of the Insurance Institute of Kenya and chairman of the East African Insurance Institute. So ladies and gentlemen, help me to welcome Mr. Mulumbi to the stage. Our third panelist is Mr. Zain ul Haq Qureshi. He's at the back there, he's making his way to the stage. Mr. Qureshi is the Chief Executive Officer of Asia Insurance Company Limited. He specializes in, he is the founder of Tagmove PVT Limited, a Lahore-based company that specializes in AI-powered digital identification of cattle, which technology supports banks in maintaining portfolio quality and reduces underwriting and claims costs for insurance. He joined Asia Insurance Company Limited as CEO in 2021 and responsible for overseeing the operations of the company, which is a listed company. He is committed to achieving key performance metrics in alignment with the organization's vision and vision. And the company offers a wide range of inclusive, cost-effective, and tailored solutions to their valued customers, and it was established in 1979. So, ladies and gentlemen, assist me to welcome Mr. Qureshi to the stage. Our next panelist is Ms. June Chepkemei. She had already spoken, so I need to introduce her again. She's the CEO of the Kenya Tourism Board. Maybe you can help me to welcome her back to the stage. Then I have Mr. Eric Gumbo, who is a director on the board of Kenya Insurance Corporation Limited. He also runs a law firm called GA Associates LLP. He's an advocate of the High Court of Kenya for more than 20 years. So, ladies and gentlemen, assist me to welcome him to the stage. To set the stage rolling, I just want to say that the role of this panel is very simple: to give us the interaction or the interconnection between entrepreneurship and sustainable insurance. Also, we'll have a different perspective on the same from the tourism sector. So, to set us off, I will ask Mr. Achoksha to briefly, in a minute or so, introduce his topic, and of course, maybe introduce himself as well to this gathering.
Good morning, everyone. I think it's a very interesting topic that we see many companies started by entrepreneurs. And talking about, in Kenya, I think if you seriously look at what the insurance sector is and how it has grown, it's been built up by entrepreneurs who went into insurance in many different ways. If you know what was happening was in the 60s and 70s, most of the insurance companies in Kenya were branches of international companies, mostly UK companies, and a lot of people who were working in those companies left those companies and started their own. So and then the companies, those insurance companies that really wanted to actually pull out, sold their shares to their senior shareholders or management. So if you look at the scenario of Kenya, it's really the most, the majority of the companies were started for entrepreneurs, but what happened was in 1984 we had the Insurance Act was enacted, and it was operationalized in 1987. At that time, the need for the capital was only 2 million Kenya shillings. But 2 million Kenya shillings in 1987, the capital went up to 50 million Kenya shillings. And it was very hard for people to get that sort of capital. So what they did was they obviously formed many partnerships. Now, if you look at the capital, the regulations, the consumer protection, governance, and compliance, those were fairly low level. It wasn't that much because the governance wasn't, the governance had just started with the establishment of the Department of Insurance, and the Department of Insurance was obviously putting together the regulations. So compliance and all those things were being learned as new ones. But over the years, the increasing of capital was required, and we certainly saw several increases. And finally, we had the risk-based capital, which has been enacted and which is enforced now. The risk-based capital requires us to be 200%. So we base 200% of your liabilities is what is required. And today we see lots of companies which have achieved that, but there are some who are still struggling to achieve that. So that is something that we have to look at. But if you look at the way the entrepreneurship has happened and then gone into the current scenario, is that you see many of these companies which are started as by entrepreneurs are very strong. They have to be well managed, and they have to have professional management in running those things, running those companies. But there's one area that we must also understand, is that from a time when general insurance did not even require any actuarial input, now the actuarial input is required like it was done in the life insurance industry. We also require a lot of actuarial input into the general insurance companies. So the professionalism has increased, and governance has obviously taken a very strong step. The governance has to be both at the board level and also at the management level. But over the years, a lot of these companies have formed partnerships. They have formed partnerships, and there have been strategic relationships, and shareholders have come in. If I speak for the Apollo Investments, Apollo started as an Apollo insurance company, and it was started in 1977 with a capital of 2 million shillings, and it required shareholders to pump in some money. So it had quite a few shareholders that were there. But over the years, then the first major step that Apollo did was it had a merger. It had a merger with Pan-Africa in 2003. APA was formed from the merger of the general insurance business of Apollo and Pan-Africa, and that's the name APA. That's how it came out. And it continued to thrive, and in 2010, Apollo Insurance bought out Pan-Africa, and it took over the 100% control of APA. And then Swiss Re came in 2014 and took over 27% of the shareholding. Just recently we announced our new partner, new shareholder, which was Hollard International. Hollard International now holds 20% of the group. And APA Apollo is in 3 countries in East Africa, Kenya, Uganda. In Tanzania, we have an associate. But with Hollard, which is in 7 African countries, we are now forming a 10 African countries to have a network in those areas. But if you look at the other companies that have been formed by entrepreneurs and become major players in these markets and in other countries around us, you will see East Africa Re was also started in many ways by an entrepreneur. East Africa Re comes from the ICA Group. ICA Group is ICA Lion Group. And what has happened is, if you see the growth of ICA Lion Group, again, it was English companies which were bought out by Kenyans, and the Kenyans were entrepreneurs. So today, the East Africa Re is a fairly large player in Kenya and Tanzania, and I presume that they will move into Uganda, but it's got the shareholding from companies which were started by entrepreneurs. Then there's the other one that is done very well not only in East Africa, but in some other countries outside East and Central Africa, is Mayfair. Mayfair basically has expanded itself in several countries in this region. Then we have Pan-Africa. Pan-Africa was, Pan-Africa has been bought out by Sanlam, and there have been so many other changes in that group that Sanlam and Allianz are now joining hands as well. But if you look at it, these are the successes of entrepreneurs who started their companies many, many years ago, professionalized them, and came to with adequate capital and have become major players in the sector. But on the other end, we have had many, many failures. And perhaps that is something that we should be looking at. The failures that have happened, and insurance is all about trust. We are talking about sustainability as well. One thing about insurance is that we are the bedrock of sustainability, because what happens is that when we insure somebody, we are making sure that we are looking after their interests. But when you do not pay a claim in time, or you do not have adequate capital or cash flow, then what happens is that that person suffers, and insurance industry suffers as well, because the factor of trust comes in. So that is one area that we have to worry about. But these failures have been, the reason for failures have been very clear. Professionalism has not been there, governance has not been there, claims have never been paid in time because the cash flow that was coming in to that insurance company has been invested in the wrong places. And the cash flow that should be paying for claims and being invested properly was being invested in different areas where you don't have liquidity, where you don't have perhaps control of that money. So those were the areas of the problems that we have. So my real point is that entrepreneurship is what has created a large sector of the Kenyan insurance industry. We have actually made sure that we are the bedrock of the insurance industry in this country, and we continue to show that we can grow to much, much bigger heights, as we have done at the APA Apollo Group. And we have seen other examples. I mentioned ICA Lion, Mayfair. All of them have grown because they have had good entrepreneurs who have turned themselves into professional organizations.
Okay, thank you, Mr. Ashok. That's quite eye-opening. I think we need to take a different perspective. I want to ask Mr. Mulumbi to give us a startup and disruption perspective.
All right. Thank you, Charles. My call is to address the topic of entrepreneurship for impact, and this around the collaboration between insurtechs, startups, and for disruptive underwriting. So I just want to walk us down the memory lane. And this really sits in the industrialization pillar of the Sustainable Development Goals. So picking from that, you go back to history, and you remember the first big revolution in the world was around agrarian, the development of Stone Age tools to improve agricultural output. This was quickly followed by the situation where human beings started manufacturing and producing machinery. So mechanization driven by oil and electricity. And the third space around revolution was now adoption of technology to automate some of our normal work processes. And at the moment, I estimate that we're in the fourth revolution, and this is about digitalization. So one aspect of the digital industrial revolution phase is in the fintechs and the insurtechs. And my interpretation of the fintech is using technology and adapting or creating use cases from a technological perspective that transform our traditional financial solutions and deliver in a different way for efficiency, for economies of scale, large-scale distribution, and access, speed. Then coming down to InsurTech, this is technology around insurance, and this builds up from the fintech perspective. So it is adoption of technology to modernize or to do our business in a different way. The aspects of technology that then we are concerned about that are changing the way we do our stuff, and speaking to pricing specialists and positioning specialists in insurance, the first issue is always around data. So the first tool that we need is access to data. And today, using technology platforms, cloud computing technologies, you find that a lot of data about every aspect of our life sits in some space, coming from interaction through the Internet of Things, and the creation of the big data. Coming into our companies, we have the customer relationship management systems, where we store information about our customers. So that creates a data set. That data has to be transmitted and interpreted intelligently. And that takes us to the second aspect, which is data analytics. And from data and analytics, using science, you glean for insights that determine and influence trends. Some of the insights that we get are consumption patterns around individuals. Then you apply artificial intelligence and you project into what is the next consumption trend of this individual. So that projection, applying analytics, perhaps in three contexts. Let me clarify that. One is the descriptive analytics. And this we use a lot in our business reporting. It really deals with the past. The second aspect of analytics that comes into play is the predictive analytics. From the understanding of the customer data, individual data that you have access to, how you predicting their next consumption patterns, what solutions can you put forth that they are likely to consume. And the last aspect that I would touch on around analytics is the influencing perspective of it, because you understand the customers from their past trends, you can predict their future, how do you influence them to consume? And that informs the marketing aspect of our business. So coming back again to our day-to-day business as underwriters, insurers predominantly, going to the sustainability aspect, and one of the pillars then is agriculture, food sufficiency. What are the major issues in this space? Climate risk. Because a lot, and in Kenya particularly, this part of our world, our agriculture is predominantly rain-fed. We need insurance then to come and bridge, to get investments, to get individuals to invest in agriculture and livestock. There is an expectation, a yield, an output from the day-to-day that they expect, so that they can meet their cost of production and they can draw an income, a living out of it, meet the other needs. So insurance probably needs to come into bridge where there are vagaries of weather, impact of climate change, that there's a fluctuation adversely to the customer's need. So I look at analytics as being able to inform us that we should be able to predict and insure on expected yield basis as a foundation. And the same would go for livestock premised on pasture consumption and availability of that pasture. Then I come into how do we actually do the business? We should be able to reach large bases of our customers, enable them to access our solutions from wherever they are. And based on analytics that I mentioned before, predicting analytics, we should be able to develop propositions that speak to their unique needs in their circumstances. Those propositions should be accessible to the targeted individuals, the targeted organizations, so that your marketing spend also goes to intelligent application and you minimize the cost. Then you come to the flow of data, and you'd like the data to flow through channels that enable the customer to reach you conveniently and to own the information that they are sharing. And on your part, you're also looking at interpreting that information. You therefore need to apply simple things like, or engage what I would call an AI employee, robotics, to just interpret the data and consistency around it and be able to determine what level of pricing you should apply, acceptability of the risk. That's the work of underwriting. Then you go to claims management, reach customers through your digital apps, and be able to allow customer to self-serve, to access, and to answer, get responses to their issues. Here, you'd be talking about chatbots. You'd be talking about organizations have adapted this. I see it in our business quite a bit. You shoot a question to an organization, you find somebody answering you. It's really not a human being, but they give you intelligent solutions. That's part of the AI solutions. Then you go on to claims, and I think we need to have technological devices like the drones to help us to understand and interpret claims based on actual fact that we can glean using technological perspective of the customer circumstances at the time. Let's talk about an accident or the farming aspect. You have the data around the climate, the weather patterns in a period of time. If it's about to accident, you can unleash your drones to go and view the site, and you have an immediate transmission of data from the site of accident to the claims office. Now, to close it, that partnership requires, and Ashok spoke about various investments that entrepreneurs are doing. But one part, Ashok, that I didn't hear is the investment of Apollo Group in InsurTechs. Because InsurTechs are evolving, they're developing mostly the technology-based individuals who are investing and starting up, and quite a few startups in that space. So how do they raise capital? Crowd sourcing. Some rely on government grants, not sustainable. So we need to see a few more interested parties in insurtechs, like the insurance companies, coming through and investing. You have funds to invest. Are they profitable? We need to see insurance companies extending and moving from just a core system function to forming strong digital or ICT departments that are not just transactionally based, but are strategic and developing solutions within the organization, even on softwares, and creating the necessary integrations. We need to see investments from various individuals and organizations through the private equity funds, angel investors, and all those facets of investment coming to support this side of technology development. The last investment I would expect to see from us as consumers of technology in capacity building, funding, and supporting individuals to take these courses that are attractive to our business in the future. And the Gen Zs, perhaps there are not too many here, would be very interested in taking up technology courses that can help and re-engaging back, because insurance industry will have committed to them, engaging in the insurance business to drive us forward on a digital platform. Thank you.
Okay, thank you, Mr. Mulumbi. Let me now call on Mr. Zain Qureshi to introduce his topic and say a few things.
Thank you very much. The topic that I'll be talking about is balancing of profit and purpose. Of course, being in the insurance industry, the product we have is a very strange product in that we lose money every time our client uses the product. And so for us, in a sense, the ideal client is someone who buys a policy and doesn't come back. And then we just meet them at the renewal period. This has been the central driving force of insurance in Pakistan, at least, that claims payment is where there's the point of biggest friction, or the most friction is at the time of claims. And this has led over decades, I would say, it's not a new thing, to a perception that is ultimately in the phrase, insurance companies don't pay claims. And then what this leads to is a scenario where insurance is only taken when it is mandatory. In the case of a bank loan or some sort of mortgage or some lease where the lender is making it mandatory for you to get insurance, so it's a piece of paper you have to sign in order to get access to the financing that you need. This has been something that has impeded the growth of insurance and impeded the penetration of insurance in Pakistan. And I feel it is the same scenario in other countries as well, that mandatory insurance drives the industry and non-mandatory products don't really take off because of this perception. And I feel that it is high time that we address this, that what is our purpose and how do we drive profitability from this very peculiar kind of product, where we don't really want every single client to use the product, that is to lodge a claim, yet that is the promise on which our entire industry and our companies are founded, that if something happens, we will be standing there with you. So I feel that now when we look at purpose, it needs a reorientation in our own thinking. And at Asia Insurance in Pakistan, the change we are trying to drive is a reorientation of what it is that we do. Is it that we simply have to manage this balancing of so many policies issued versus so many claims processed, so many claims paid? Or should we go deeper and try and understand where the pain points are for our customers and see what middle way we can find? To that end, the internal mantra that we are now driving is we are in the business of paying claims. We are not in the business of issuing insurance policies. The insurance policy is a step on the way to issuing a claim at some point down the line. And what we need to do is manage this payment of claims, this cycle, as efficiently as we can, being cost effective while also being judicious in how we assess claims, how we pay claims, to make sure that our clients get the benefit they need in their hour of need. I'd heard mention earlier by one of the speakers about delays in claim payments, causing issues with clients, leading to negative perception. You've mentioned as well about the inflow of insurtechs and the data that they bring. and how that can affect or how that can improve the insurance process. And I feel one of the things that we also need to remain cognizant of is, as insurers, and talking about this purpose, our purpose is not to become developers of technology. We need to collaborate with others in this field. InsurTech is one example, other broad range of fintechs are another, that enable us to execute on this purpose as efficiently as we can, as best as we can, to be able to give out claims where they are justified, in time, ahead of time if we can. So I'll share an example of something very specific we've done in Pakistan, where historically we have had livestock insurance portfolios that would run at around a combined ratio of 85 to 90%. Various types of product iterations were tried, distribution channels were tried, friction was built in. But ultimately, what happened was that of the 10 insurance companies that started doing agriculture in Pakistan, the number reduced to 6. And among those 6, 4 would take on livestock, but only if you give us some very profitable crop insurance with it. Otherwise, we won't do livestock insurance. In Pakistan, a heavily agrarian country, we have a large population of livestock, and these are smallholder farmers with 1, 2, 3 animals each. So for them, these cattle are the single largest in their personal balance sheet, the single largest asset. And yet they were going completely underfinanced, completely underinsured, because of these issues that I've shared with you, that the insurance companies were not confident they can turn a profit on this sector, so they just started pulling capacity back. However, what we found is using technology that allows us to individually look at livestock and assess whether it has suffered a mortality case, where it was it falling within the policy covenants. Fulfilling all of these digitally allowed us to issue livestock claims on the same days that the animal died. And this was a sea change for Pakistan, where earlier the claim cycle would stretch for 2 months because we're verifying with veterinarians, we're verifying with the local village where you are to try and actually find out, has this animal died? They had 5 animals. Is this the one that they had insured with us? Now all of it can be done off of a smartphone, and we can process the payment the same day. The result has been a dramatic increase in our portfolio in livestock, and side by side, a dramatic increase in the profitability of this portfolio. It started with that we want to actually pay claims faster than we do today. And that is what has led to this increase in profitability. It's very counterintuitive when you put it down on paper that we want to pay claims faster and that will lead to more profit. But the fact is, if we are able to derive products that actually solve pain points and solve issues, that purpose, if we keep that front and center, it is what will lead us to profitability in existing portfolios and in growing the market, so that customers have a trust on insurance companies and they don't try to cheat you either. Cheat, I use here loosely. The point being that they don't try to just find ways to comply with your paperwork so they can get some money out of you. Now they know that when there is a genuine case, when I've given the proof, the payment will come ASAP. They're more willing to pay the premiums up front. And we've generally found that showing a willingness to pay claims is actually what is leading to this growth. And I believe that, coming back to the theme of the topic, balancing of profit and purpose, I feel that if we keep this purpose in our minds, there is no balancing here. The purpose leads to the profit. And that is the message that I would like to leave with. Thank you very much.
Okay, thank you very much, Mr. Qureshi. That was very well delivered. I didn't know you can, over 100 cows, you can know insured that one and not that one. Maybe get now a different perspective from the tourism sector. I'll call upon Ms. June Chepkemei to speak to this.
Thank you. My mind is just to agree with what we all have interacted with. Insurance and travel work hand in hand. Today, you cannot be authorized to travel if you are not insured. But our current traveler is more aware, is demanding, and is very particular with what they want and what are some of the risks that they want to be covered against. And I think it's a high time that we work more closely with the sector to ensure that we are responsive to the emerging needs of the current traveler. So what are some of the emerging needs of the current traveler? The current traveler is more of a sustainable traveler. They want to be able to trace the carbon footprints and how they're offsetting it. They want to travel with a purpose. They want to travel to impact, and they want to travel and have a bit of cultural immersion and impact of their travel in local communities. So as a board, we are beginning to come up with new programs, products, initiatives to speak to that segment of the traveler. One of those is sustainable travel program that we allow the travelers to be able to engage in activities that allows them to offset their carbon footprint. For instance, we launched One Tourist, One Tree. And with this, we are working with the hoteliers and the players within the industry, the trade, to just ensure that that traveler gets a chance to impact and to offset the carbon footprint. The question is, where is the sector? Are you in that value chain of the sustainable traveler? Is it something that you give in the travel policy? How have you tailor-made it to speak to that specific segment of the traveler? The current traveler is keen on conservation. How do you then plug in to make sure that whatever it is that they engage in within the parks are sustainable? What are some of those facilities, eco-friendly facilities that are more appealing to the 21st century traveler? How do you have a tailor-made product to encourage eco lodges and facilities, the conservation efforts within even the tourism infrastructure generally? We need to fill the insurance sector in that particular value chain. Beyond that, there are disruptions that come within the tourism value chains, whether it is cancellations of flights or a delayed flight, or you've lost your baggage, or there are damages, or there are just civil unrest, acts of terrorism and medical emergencies. Are we still giving it the same way we did yesteryears, or we are able to then leverage on technology to begin to have tailor-made solutions for that kind of a traveler, and knowing their trends, knowing what their routes and what are some of the possible insurables within that particular journey of the traveler. So we, as the board or the tourism players, the trade, we feel that we are not up close. We need to get up close with the insurance industry and begin to then work together to develop those agile, responsive solutions that will excite this 21st century traveler. A majority of them are young people. They are adventurous. They do not have the same appreciation of insurance as it is that they have in their travel and the expeditions that they want to offer. So I think for us, this platform gives us an opportunity to say, hey, let's talk to each other, let's have conversations, let's co-create, let's come up with continuous products and solutions that speaks to the ever-changing needs of the 21st traveler.
Thank you very much. She's basically asking us as an insurance industry whether we are on the table when the tourism goodies are being shared, or we will hear about it later. Now I invite Director Gumbo to also introduce his topic and speak to it.
Thank you very much, Charles. Now, listening to my co-panelists, starting from Director Omar Shallow, the common point that we seem to have is that the opportunity exists. And it's not just in Kenya. Listening to Qureshi, listening to Mulumbi, listening to Ashok, and June has brought in an interesting perspective from tourism. Really, it means that the opportunity is here with us. I've been asked to talk about why then would we say that Kenya is an attractive destination for insurance business. So, sitting or looking around this room, these are the sector and industry players and leaders. And I'm sure each of us has had an opportunity or a moment to introspect and just dig into the nature of opportunities that we see, not just in Kenya, but in the region, and that is what brings us together. Now, I want to try and just give a bit of a perspective from where I see it, and having listened to the team today, and also yesterday, there's been conversation around what the opportunity looks like. There's what then I would consider to be partly applicable and uniquely, a platform that we want to exploit in Kenya. We've had conversation around climate change. It is a conversation that is not new in Kenya. It's a global conversation. It's a topical issue. It's a current trending concern. Now, as people in the insurance industry, have we put in sufficient time and effort to understand the opportunity that climate change presents? Have we even gone into understanding how we can shape the policy around climate change? When we speak about, floods, speak about agriculture. Our president, His Excellency Dr. William Samoei Ruto, is one of the greatest champions of climate change. It's a topic that is taken so much interest in that when he speaks about it, you'll be wondering whether it would not be, that is not the subject that he would have had as his PhD area of interest. So if at a political leadership level, we've taken that much interest, and that as a country, the first champion on matters climate change is none other than His Excellency, the President. Is that not an opportunity for us to exploit? Is it not one of the items that will be able to say that even if we don't take it in the form and shape in which it has been presented, can we then have interventions from a policy perspective, influence the actors and the decision makers in that space to be able to then package something that makes sense for the industry? We've had conversation generally around technology. Again, Kenya has been very robustly engaged in technological advancement. Mulupi just spoke about fintech, insurtech. Those are examples of conversations that we've had around, and it's not a Kenyan conversation. Of interest to me would be the fact that Kenya has demonstrated very deep interest. If we've been keen to follow the interactions around technology in Kenya, the stakeholders, led by, again, the president himself, have been very vocal around how much we have embraced technology. Speaking as a lawyer, after the COVID-19 experiences that we all had, today our courts are almost 80–90% virtual. It's a platform that then presents so many other dynamic concerns. There are issues around defamation, use, misuse, and risks that inure to us on account of the use of technology. Do this present an opportunity? Again, like I said, it is not an opportunity that is unique to Kenya, but because the political leadership has demonstrated interest in that space, it gives us a platform through which we could engage to shape it in the form that would give us an opportunity as insurance industry actors. Sometimes there are risks that are there, but which we have not taken time to make the actors, the key actors in that place, in technology space, appreciate and just give some sort of security or mitigation around. That becomes an opportunity or an entry point for us in the insurance industry to be able to co-create solutions instead of sitting there and waiting for, like a court to make a pronouncement, then the insurance industry comes in to say, oh, wait, the court said something in Kenya yesterday. Can we influence the decisions that come from court? Can we influence the decisions that the policy decisions that the government is coming up with, so that then, as we talk technology, we're also talking about the risks around technology, and so therefore the opportunity. I think the point I'm trying to make is there is more than sufficient goodwill, political goodwill, for us to be able to engage. And again, in Kenya, that is something that we really don't need to even overemphasize. my colleague, Director Omar Shalo, spoke about emerging markets and corporations. From, I think, this is about, I would call it 7 years or so, but more robustly in the last about 2 years. Again, Kenya as a country has very, very robustly gone out to try and create partnerships across the world. About 3-4 months ago, we had a very interesting engagement which had African countries meeting in Korea to discuss partnerships that would come from what the opportunities that exist in Korea versus the need that is to be found in our region. Kenya participated in that platform very, very robustly, and a number of bilateral understandings were arrived at. Do we want to stop and ask ourselves, when those countries, what opportunities do we see in that space from an insurance perspective? When we talk about them coming to support us or partner with us in PPPs, what does that mean from an insurance perspective? Because obviously there are risks that apply in that space as well. So again, that is an area that I think would be of interest to us and as a people in the insurance space. And I would call that general area of opportunities the contemporary opportunities that we have. Now, contemporary because they are not conversations that have been there for, I would say, a decade or more. They are conversations that are current, like I said. They've been there for maybe 3, maximum 5 years. And so not so much of them have been exploited. Just take an example of this sustainable traveler that June spoke to. It's something that I've had today for the first time, that we could talk about, carbon footprint, and it becomes an area of insurable interest, to us as actors in that space. Now, quite apart from that set of factors that we'll be considering or looking at as creating opportunities, which we say Kenya would be very actively involved in, we have the traditional, if you wish, conventional ideas or factors that would make Kenya equally attractive. Let's look at our GDP compared to maybe our neighboring countries. We are currently, I think, as at 2023, if my memory serves me right, we were at about 120 billion USD. That is not, whereas it's not a very big figure, because if you look at countries like Nigeria, they're at about 500 as at 2023. Countries like South Africa, I think, must have been in the region of 350 billion USD as at 2023. Comparatively, if you look at Kenya in relation to our immediate neighbors, I think 120 billion USD is a sufficiently significant number as to evoke conversations around what that means to the insurance actors. And it comes in at many levels. It comes in from a perspective of, so far, what have we been able to achieve in terms of insurance penetration in our country? Again, if I'm to recollect from my previous readings, I think we've only managed somewhere about 2.3 to 2.5% penetration in Kenya as a country. Now, is it possible that we can very deliberately push to get that number slightly higher than that 2.3? 2.3, if I was to look at it vis-a-vis the GDP, would give me something like about 2.7 or so billion USD. If we pushed that number to, say, 5%, we would be looking at almost about 5 billion USD. That is a significant shift or jump in numbers that would, of course, be of interest to actors in the insurance space. And so our GDP speaks for us as a first space. Now, we also have our population, and our population comes in 2 ways. First, we have a very skilled set of population. We have our youth, our Gen Zs, somebody spoke about them. They give you the innovation, they give you the energy, they give you the workforce that you need in that space. But from a market perspective, what would be important is the rising middle class that we have. There's a very serious growth in the middle class population in Kenya. Now, traditionally, all these people have relied on, what we've called motor vehicle insurance and perhaps at best health. What else do we want to introduce this growing middle class to, so that then we expand and take advantage of that, that demographic? Let's look at our geographical location. Now, Kenya has been referred to as a gateway to East Africa in particular and Africa in general because of our port in Mombasa. The quantity of goods and services that we are able to see, penetrate from through Kenya into East Africa and the region, that is a unique and a beautiful opportunity for us to be able to exploit as people in the insurance industry. It's one of those things that sitting where I sit today, looking at the infrastructure around it, we now have the standard gauge railway, we have a very serious road network, some of it done, some of it underway. What does that mean for us in the insurance industry? And I think those are some of those items that if we keep having conversations of this nature around, then we would expand that number to even push our 2.3 to a possible 5%. And so what it takes from us is this sort of conversations. I was discussing with my friend Sam Ogola earlier about, he was just sharing a book with me, and I pushed back to, a reading to him. Maybe it's something I could share with that as well. There's a small article by a gentleman called Ernest Shackleton. The topic around it is endurance, the endurance of Ernest Shackleton. It is a beautiful read if somebody wants to just see how much energy, how much commitment, and how much force we need to put when we're discussing the opportunities that are around us. I'm sure that if we have that sort of commitment to the cause like that of Ernest Shackleton's, then sitting here next year, we'll be talking about this in a very, very different context. Thank you, Charles.
Thank you, Director Gumbo. Just to summarize, before I give them a chance to, in 2 minutes, wrap up their thoughts, it's clear from this discussion that first, as an industry, there are very many opportunities that we have not availed ourselves in technology, in the tourism sector, in policy, as Director Gumbo has set aside. So I think, I hope this is awakening our curiosity and creating in us the urge to go out there and see how we can benefit from all these things that are out there waiting to be served by us, and of course in the process, because it's by serving that you make a living. In the process, of course, grow the business that we're in. Now, maybe in no particular order, I can maybe start with Mr. Ashok. 1 minute, just wrap up your thoughts, and then we call it a day.
Thank you, Charles. I just reflect on some of the issues that were brought up. The insurance industry on climate change, we have moved into climate change in a very interesting way, because what's happening is that there is something that we have been doing as APA, but also as the Kenya Agriculture Insurance Group, is we have been insuring smallholder farmers and pastoralists. Now, these are two very innovative ways of the areas that we are doing in. And basically, we are covering the crop for the farmers and the livestock. We have the availability of forage for the livestock. And everything, all the cover is really about climate change. Because if they're not, Kenya, the agriculture is rain-fed. So when there is not enough rain, the crops suffer. So we have been insuring them for many, many years and providing, claims when there is failures of the crop. And for the pastoralist, what we do is we not insure. We actually started the what is now DRIVE, was a Kenya Agriculture Kenya Livestock Insurance Program. That's we started that one with ILRI. And what we were actually providing cover for was the forage on the ground. When the pastoralists did not have enough forage on the ground, we would actually send them the claim amount so that they can get feedstock and also water. So those are the things that we have been doing. So climate change, actually, we have been taking care of it. But the most recent problem that we had with the climate change was the flooding that took place. And that is something that we have to decide is how can we ensure, we do the industrial risk, we do the commercial risks, and the risks in urban areas. But how can we support people in the rural areas for flooding, because that happens quite a lot. But really looking at going back to entrepreneurship, InsurTech actually comes in as entrepreneurship. And what is happening is, I don't think a lot of insurance companies in Kenya have invested in InsurTechs, but internally we are doing a lot on digitization. We have digital teams working on portals and providing apps. They build apps for our solutions that we can take to the people. And a lot of our health and motor onboarding is done on the app. So really, I think, but there is a lot more room there. And then the most interesting thing I learned from Pakistan is about the settlement of claims for the livestock, for the dairy cows that we want to insure, that we are insuring. That has been a problem for us, and is something that perhaps we should learn from Pakistan and see what we can use here. Thank you.
Thank you. Mr. Mulumbi.
All right, my parting shots will be around, and here I will also refer to the institutions that actually gave me the opportunity, first to thank Kenya Re, and two, to allude to the great collaboration between Kenya Re and the Bank Assurance Association. We have come to you and asked you to help us to deal with an issue that banks are trying to solve under the climate-based risks, which is in the agri and livestock. And I know that there were concerns around data, but from a bank assurance way of doing business, we see great opportunity because we are able to leverage data. We may have little of it, but that little which we have should give us a platform to start. But let me give a historical perspective. In my view, this is just my view, of the evolution of insurance. We surely must have started from somewhere called gambling. Then we created the 6 principles of insurance. Then we went into risk and diversification, so reinsurance came in. We've progressed to data, product development, and that's the area of innovation that I feel that we are stuck in. Yet, great opportunities now sit in the area of digital evolution, the digital revolution to drive, number 1, customer advocacy. Just speaking to the Pakistan experience, settlement of claims, I see that we are heading into a space where customers will be doing the sales for us because of the excellent experience, the ease with which they are doing business. So that will speak to an improved net promoter score for insurance companies and the ease of doing business, which is the customer effort to access our services reducing significantly. And the investment that should support this should really leverage on the big data, should come through, and we insurers, we must go into data and analytics big time. We must have people like data officers in our organization to help us draw from what's happening, from what we know, from information we have, and gleaning information from the global universe. Machine learning, artificial intelligence, and then integrations. I want to see a situation where a customer self-onboards or tailor-makes a solution within predefined, scripted parameters. He puts specific information, a few questions here and there, and on his phone, he's able to customize and create a solution, links to an insurance company, pays through digital financial services, and as that data hits the insurance company, that transmission should also go to the reinsurers. We probably passed the days of relying on reinsurance bordereaux. I had the privilege of preparing them early in my career. I guess today we do some data sharing, but can it be real-time online transmission of data all the way to the retrocessionaires? Lastly, I'll also mention something about the experience of my organization, KCB. The beautiful thing, and we slightly mirror the footprint of Kenya Re. From the Indian Ocean to the Atlantic, we cover the entire region. So opportunities for partnership across as we do our bank assurance solutions in that space. But one thing that you'll see from KCB is that about 90% of the transactions that you customers do today are away from the brick and mortar, the bank branches. Why is it so? How many of you are still writing checks at a personal level? It's becoming moribund. Can we go back to our business as insurance and pick out what is it that is no longer relevant, that we are holding on to, and unleash ourselves into the future? Perhaps the last bit of it is to look at the brand equity of players in the financial services industry. If I speak to Kenya, you will find that the brand awareness for banks that are embracing the digital solutions ahead of insurance companies tends to be higher. I believe that the digital platform is a major driver for the brand equity of the other financial industry players. Thank you very much.
Okay, thank you. And now, parting shot from Mr. Qureshi.
It's been very enlightening listening to the other panelists today and yesterday, and having a chance to engage with some of them outside of the panels as well. I would like to leave with this, that there's much work to be done, not just in our companies, in our industries, but across our industries as well. And what I would like to draw from is two idioms. One of those is something that I was told some years ago. It was more in a career context, but I think it applies here as well. And that was that you can be anything you want, but you cannot be everything. And to that, I would say that ecosystem development, collaboration, the examples that you shared of African companies going to Korea, discussing areas of collaboration. Similarly, we'd be happy to share our experiences from Pakistan and enjoy the free exchange of ideas that I've experienced here as well. And so again, I would say ecosystem development, collaboration within country, across borders, that is really the path that we are on, and that is the path that I feel is the future for this industry. As risks become more globalized, climate change is a key example of that, where all of us are going to be partaking in that risk in one way or another. And so the more we're able to work together to derive solutions, the better our future will be. And the second, and please forgive me if I get this wrong, but I was told this is an African proverb which said that if you want to go fast, go alone. If you want to go far, go together. And I feel in that spirit of collaboration, we'd be very happy to share ideas as best as we can, because it is a common future that we have to work towards, where ideas are shared across borders, where solutions are shared. And again, keeping the purpose in mind, it is a common purpose that we have as industries in various countries. So I look forward to exchanging these ideas and continuing this. And I would also like to leave this with a word of thanks for Kenya Re as well, to arrange this and to invite us and get us all together in one room. It's been very enlightening to hear of the experiences in Kenya and in adjacent countries, and I look forward to more of the same. Thank you very much.
Thank you. Ms. Chepkemei.
Thank you. Before I could give my final remarks, allow me to just chime in from the presentation from the previous speaker that had an element of entrepreneurship, innovation, and insurance. And dare to say that as a sector, I've had your penetration in terms of insurance cover. And I'm tempted to suggest that you just need to open those windows, open the doors, remove the walls, and allow the people, the ordinary people, to really understand the trade. From where I'm seated as an outsider looking in, we have perceived this sector as a closed industry. Maybe it's high time you drop the jackets maybe and wear ragged jeans and get out there and allow the people to relate and identify with the sector. And in so doing, you'll begin to then see a lot more innovative inputs that will then take your penetration to the next level. Having taken that risk, I'll pick from the speaker that just concluded in terms of partnerships and innovating. And from the travel trade, I would like to say that we are open to partner. And I've just been thinking through where then should we begin to consider our partnerships. We could partner in tailored insurance products that specifically then speaks to elements of ecotourism, sustainable practices, eco-friendly infrastructure, wildlife conservation, community engagement, and that can probably take the penetration probably by 1% or 2%. In terms of risk management, as a travel trade, we have the capacity to assess our risks as a sector. Could that be an area of partnership? And the tourism boards are all over. Every single country has a tourism board. Can that be your partner? In terms of promotional campaigns, that as we promote the destinations, could there be possibilities of joint marketing campaigns to promote sustainable travel and see how then you can begin to speak into the mitigations and all that? How do we work together to educate the travel trade about the need to cover, about the need to take their risk assessment and so forth and so on? How about an incentive program jointly to then reward those that are practicing sustainable, that are taking in sustainable practices in whatever facet it is that they touch. And in conclusion, I want to believe that to bring disruption, you've got to make sense to the ordinary person who probably does not understand what you do. The day my mother in the village will begin to include insurance as part of budget for farming, apart from my seeds, my fertilizer, my tilling, my whatever, then you have insurance as part of the must budget for, then you just might break the ceiling. Thank you.
Okay, Director Gumbo, your parting shot.
Thank you again, Charles. I think really mine is a call towards saying, if you know better, you do better. And so we're here to represent our business interests. The key drivers of business interests is both in the private sector, in the public sector. The private sector benefits a lot from effective policies and deliberate policies from the public sector. Now, to join my colleagues in saying, if we know better about the sort of opportunities that we could send out to the middle class, the lower class, the upper class, we'll have expanded the bracket of those who would be uptaking our insurance services. From a government and public sector perspective, we just need to open our ears and eyes to see what each administration stands for. Our administration, current administration, has been talking about affordable housing, health, infrastructure, you know. We then want to ask ourselves, if they are talking about that from a policy perspective, are the policies that they've put in place, are the laws, are the regulations working effectively? Are they supporting their own agenda items? to what extent do we want to then engage them? And we have actors sitting with us here who will then be able to articulate those industry concerns so that then policies that are formulated at that governance level respond to the need and the opportunities that we would all want to benefit from as a sector players. And I think that really would be my call. Thank you very much.
Okay, with those remarks, I don't want to dilute it by adding so much, but let me say that we have been challenged. We have been challenged, and as an industry, I hope we are listening. If our doors are still intact, our windows are still intact, and we are still using walls to lock ourselves inside, we have been challenged. Now, I think that concludes this panel. I want to invite Larry to take over the project.
So thank you very much for those remarks. And of course, as tradition, we are going to take a group photo. This is memorable, so that next time, in the next 2 years, when you're having this seminar in French, we can try and test and see if all of them are going to be presenting in French. So maybe if we stand, we get a group photo. And of course, also we have some gifts for our panelists. So I'm going to invite Catherine to come and help us through that. We're going to present some gifts. Karibu sana. I'm going to request our MD once again to come and present these. Since you started the morning receiving an award, why not also issue awards to our panelists? Karibu sana. And even as we're getting this underway, we are going to also just, before we take a break, we're going to get a quick word from also another key partner from the Kenya National Chamber of Commerce, who is around. He was supposed to have spoken earlier, but he's here now. So we are going to also to be listening to just a few words from him before we go for our short break. And of course, once again, a big thank you to all of you, the delegates, for attending this, and to all our sponsors and all our partners, and everybody who's attended. Speaking earlier on with several people from various institutions, and of course, I was just reminded that Jubilee is also in the house. They're here. Don't forget that we are very much present, so we appreciate your presence. I know the ladies in the room somewhere. We'll take a brief photo first, then we'll do the... Yeah, just carry it. We'll take a group photo, and then... Yeah. We'll take a group photo. I would also like to request Director Omar Shallow, because you also were part of this panel in one way, so we also have an award for you, an appreciation for your contribution. Of course, fantastic artwork made here, representing one of our biggest prides in the country. So depending on what you're holding in your hand, that is going to be your task to go and find them in the country. Tembea Kenya, see if you can actually trace the animals that you're holding. Okay, so we can have a group photo for all our panelists and the presenters. Okay. Okay. Thank you very much. Asanteni sana. You may take your seats. And now, please allow me. Thank you. Thank you. Thank you. Allow me to invite Said Ali, Chairperson of the Kenya National Chamber of Commerce, to come up and just give us a few words before we move on to the next part of the program. Karibu sana.
Esteemed guests, distinguished speakers, and fellow industry leaders, my name is Said Ali, Chairman of Chamber of Commerce Industry, Nairobi. I'm also the Honorary Consul for Namibia in Kenya, and Chairman of so many other things which I don't need to bore you with. I'm Jambo. Most of the panelists discussed most of the things I wanted to mention here. I don't need to read the speech because I came a little bit late. I was caught up somewhere else. But in a nutshell, what I picked from the panelists, there's some aspects which we need to look at because we are the consumers of the insurance products in this country. Most of you are providers here, you are CEOs, and some of the issues discussed affects most of our members because they're the business people on the ground. What caught my attention is the issue of livestock. This has been a nagging issue, and I hope and pray that it's a matter which is going to be discussed internally and come up with a solution for our membership. Mine is mostly on, something like to-go insurance, whereby you get insurance on need basis, because most of the players in the market do not understand the nitty-gritty of the insurance application. You must agree with me, your application is not easy. You look at your forms, they have so many little words in between, and it's quite tedious to read. Make it easy. Through fintech. Somebody can just plug in, fill, and move on. So mine, I just want to mention, I'm happy somebody talked about the livestock. I think the guy from Pakistan. I'm very keen on that. But MD, I hope to hear something good from you. I don't have much to say, but Kenya Chamber of Commerce is with you. We are the users of your products. Engage us, we'll engage you. And we can do so much together, more so on training, because many people don't understand the need and importance of insurance. The last time, I can just give you a small brief, I had imported some products from Egypt because I normally buy from Egypt. The next thing I'm told, my products are late because the ship broke its steering wheel. I didn't know ship has a steering wheel. And why is it my concern if it has broken its steering wheel? So I was forced through my agent to pay more money because I'm told I was not insured. That's a long time ago. So those are the things we need to be educated on. Sometimes it is out of ignorance. We don't engage you in terms of using your products. But I'm here to appeal to you. Let's engage further and more with Kenya Chamber of Commerce and educate us on your products. We have 47 chapters in 47 counties. Use our platform. Get to the users, your potential clients. Thank you very much with those few remarks. Thank you.
Asante Sana, thank you very much for capturing that and for sharing your story with us. We are going to be taking a short break. It is now 11:30. We agree that we're taking a 10-minute break, so we come back for the next panel, Then, once we finish that panel, we'll be breaking for lunch before the final panel. So we've got 2 more panels to go, very intriguing panels. The next one, we're going to be dealing with issues of innovation and technology for growth and sustainability in insurance industry. And the moderator, Mr. Samuel Rugia, would like to just have a quick word with the panelists in boardroom number 2. So if you're a panelist in the next session, please just proceed to boardroom number 2 very quickly, just for like 5 minutes. The moderator would like to have a quick word with you. And I'm talking about Dr. Lawrence Mushemi, Mr. William Makatiani, Mr. Tirus Mutoru, Mr. Isaac Maina, and Mr. David Kanyi. So please, if you can proceed directly to boardroom 2 for a quick brief, and then you can go and have your tea. So, tea break. We are back here in 10 minutes so that we can start in 10 minutes, we can start by 11:45. We agree? Thank you very much. Asanteni sana once again, and grand merci à tous. that are being presented, and I think it's just important that for us to hear from one of the delegates in the room. Karibu sana, welcome.
Good afternoon. It's really my great pleasure to be here among you all, representing the Egyptian market. And I'm very happy to be here. Apart from thanking the organizing committee, Mr. Hilary, about the warm welcoming and hospitality that we received, I noticed three things. I never forget it, because I only faced it in this seminar or this summit, despite I have attended a lot of conferences. First one, it was the first time for me to meet Mr. Hilary, and I came here 3 times. This is the 3rd time, 2 times as a Takaful speaker. I love the Kenya very much. I love the Kenyari. I love the people there. And this is the first time for me to meet Mr. Hilary. And for me, it is very important to know the man I am dealing with. And according to our Sharia, Islam, it is very important to give the people what they deserve, actually. Mr. Hilary is a man, he's talking a little, but he's done a lot. Mr. Hilary, thank you for everything, for this summit, for your leadership. Actually, the second thing which I noticed and touched my heart, actually, when you opened all these speeches, you started with prayers. Christian, very respected Christian sister, and very respected Muslim brother, Omar. I have never seen this in any conferences, anywhere. It's a vision, how we gather all people together to love each other. It's a leadership, how you can manage your market, how you can manage your society, how you can manage your company in a way that lead all of them loving each other, because we are all coming and relating to the same sort, which is God. My second remarks is I have fully impressed with the last topic, actually. And I even asked Mr. Dr. Omar to send me the presentation. It was very informative, actually. And I remember a very good word mentioned by Mr. Eric. We normally, when we talk about climate change and the catastrophe losses, we are looking to them as a sort of threat, a lot of risks that we're gonna face. But Mr. Eric used a very magic word. How we can handle this as an opportunity to the market. This is very important. And this leads me actually, because we all suffering or facing a group of risks, emerging risks, that very rare to be grouped together. We are facing climate change, we are facing political risks, we are facing economic risks. And when he talked about the climate change, I started to think, why you don't pool all our capacities in Africa to establish a pool that all insurance companies across all the continent are members of this pool, and it could be managed for catastrophe risks, and it could be managed by 1 or 2 or 3 reinsurance companies. This is my thoughts. Thank you very much, Mr. Hilary. Thank you very much for giving me a chance to come here, to know you personally. Thank you very much to you, all your team. And on behalf of all the Egyptian market, I'm a board member of Insurance Federation. We're gonna have the IO conference in our Egypt, and I'm we are very pleased to welcome all of you in Egypt to talk about our interests at all and to cooperate together. Thank you very much.
Thank you very much. I know one thing that was emerging even as we're having our tea break is the fact that yesterday we did not get a chance to have a Q&A session with some of the panelists. And we really apologize for that. Yesterday we were really hard pressed for time. And I hope that you understand. But also during some of the sessions, either tea break or lunch break, please take advantage of those times to go to the panelists directly and engage with them directly in case maybe you've got a question or a comment. We will try to have some Q&A session for the next panel. I know the moderator is still finishing up with the panelists because they had just to align on one or two things before they come and join us. I think they're almost ready. And even as we are going on with that, once again, I mean, we'll always have a big thank you to all the sponsors who have done a tremendous job to ensure that this is going on. I wish I could, thank all of them individually. I wish I could give all of them a chance to come and speak, even if it's for a minute. I will try and see if I can find maybe one or two. I think it's a very symbolic gesture if we can be able to at least, get somebody to come and speak, not necessarily on behalf of all the sponsors, but maybe on their own behalf. I know speaking earlier on to a lady from the Gulf African Bank. Is she here, Zara? She's somewhere in the room? Yes. And maybe just to come and maybe tell us the why. At times it's good to be able to sponsor, but why? And hoping to see you again next year. And why will you participate again next year? And what this means to you. Maybe just a minute, even as you're waiting for our panelists to come. Just come up, maybe for a minute, just to tell us what this means to you. And hopefully we'll be able to get a view from the other sponsors as well. Karibu.
Good afternoon, ladies and gentlemen. My name is Zahra Ahmed, in case we are not yet acquainted. I'm an institutional banking and corporate relationship manager at Gulf African Bank. Gulf African Bank is the premier Sharia-compliant bank in Kenya, offering products that address not just the needs of the Muslims, but everyone in the country through fair, safe, and ethical banking practices. We are an award-winning 16-year-old pioneering Islamic bank, not only in Kenya, but also in the entire East African region. Our customers are served in 14 branches spread across the country, which are supplemented by robust digital platforms. As a bank, we continue to enjoy the support and backing of institutional shareholders who are fully committed to creating a solid bank characterized by growth and the very latest product riding on robust technology and delivered with international benchmarked standards of service quality. The bank's shareholders include Istismar World, the investment arm of the government of Dubai, Al Salam Bank in Bahrain, a leading regional bank headquartered in Bahrain, IFC, the private investment arm of the World Bank, Trade Development Bank, Sheikh Abdullah Mohammed Al Rumaizan, a leading investor from Saudi Arabia, among others. Our partnership with Kenya Re has been a long-standing and mutually beneficial one that has seen us customize solutions that have transcended the boundaries of your everyday traditional banking. We pride ourselves as our customers' partners for growth and are able to tailor-make and adapt solutions as the situations dictate. We are honored to be a part of the first CEO Summit 2024. Distinguished ladies and gentlemen, we are open for business, and thank you for your kind attention. Thank you.
Thank you very much. Everybody keeps saying we are open for business. Kenya is open for business. Everybody's open for business. So we are open for business. And I think my panelists have just walked in right on cue. And I'm going to be inviting Mr. Samuel Rugia. Before he moves on even to the panel, there's something that he wants to do. Yes, and he said that this is a surprise, don't announce it, just call me and I will handle the rest. That is a very tricky thing if you're an MC and you're not sure what the person is going to do. So long as he's not doing cartwheels on stage, we will accept. So please come on stage even before we move on to the panel and before we invite our keynote to come and give the first address and set the tone for the next panel session. Karibu.
Thank you very much. Good morning, everyone. Are you having fun? Are you having fun that you're part of making of history? This is the first time Kenya Re is doing the CEO Summit. And how many in the room love philosophy? Philosophers in the room. Very few. Who said that if you dwell too much on an idea, it ends up becoming a monster? Okay? So what you're trying to say is that today something has started. And this, we're going to work on it, we're going to push on it, and it's going to be a monster of summits, CEO summits that you can never imagine of. So for me, I want us to take a very short time. The next panel that is coming is about innovation and technology. And the things that, or the session is about, the whole session from the keynote speaker to the panelist is about innovation and tech. And we know that technology is something that we need to have, but sometimes you don't know what is in store for us when you move forward in this tech. It's like a friend that you know you need to have, but you're afraid of that friend. So I want us to do a surprise launch for you, our customers. You'll see one of the things that drive tech is customer needs, customer service excellency. That excellence in customer service is what we're trying to achieve here. So we're going to launch something. I'm going to invite my MD. He's been very key. By the way, one of the things that I enjoy being a CIO to our MD, group MD, is that he's a tech person. So I don't have to explain solutions that we need to have. Actually, in most cases, he's the one who actually asks me, where is this? So that's one challenge that I don't experience. So I would want to invite him. And actually, there's another function that we're going to have in relation to all this. That is a hackathon. There's a lot that you're trying to do. We are not benchmarking, we are making the way. Because if you're asking for the way, it means that actually you're following. But for us in this space, we know very well there is nobody who has actually been applying these new emerging techs. That's why they are called new emerging techs. So we use the strategy of actually pushing our limits to make sure we can actually make these technologies work for us. So without wasting time, let me invite my GMT, Dr. Hilary Washinga, to take over this brief session. It's a very brief session, and tell us, give us actually the go-ahead to be able to show you this product. Karibu MD.
Hey, how are you? How are you again? So in my many hats, one of them is I'm an IT person. I'm an accountant, I'm a professional risk manager, but I'm also an IT person. Okay? So we decided to make our website interactive. We have a chat bot. We updated our website, so we are relaunching it. So we want to take very few minutes of your life to just show you what we have. And it's just to give you a hint that we've been working on AI, artificial intelligence, and robotic process automation for quite some time. We went past POC, proof of concept, but we ran out of budget. So we stopped there, but we promised that in the first quarter of next year, we are going to launch our solutions. For instance, we were able to reduce the claim processing time from almost 1 to 3 days to 10 seconds. Okay? And we were also able to reduce, again, time taken for big bank reconciliations, okay, from a couple of days to 55 seconds. Now, what we have here is something that we are saying is a POC, past POC, okay? But we are still training our agents. So as we launch it, at times you might put in some complicated solutions or questions that may not be part of what we are training. But what our agents do is whatever you throw to them, they store and they learn. They store, they learn. Okay? A machine is as good as what you are giving it. So with those few remarks, I want Rugia to just show us the website. Then I invite my boss to just launch it. Then after that, we are going to very interesting session, okay? And I came heavy today, okay? I came heavy today on IT. So our chief guest speaker, I want to preempt, is a person who supervised my MBA projects, master's, and also my PhD, my doctorate. So that is a person who will be taking you through the next session. So this is what we have. I may want Chairman to just come, because we may not want to go past today without her clearance. So Chairman, welcome. So we'll be demonstrating to you how to engage our virtual assistant. And this is very key, because we are saying we want to serve you 24/7 throughout. And of course, because we have this in the cloud, the availability is 100%. So regardless of where you are, you can be assured that Kenyari will answer you as and when you need us. So behind this bot, this chatbot, is a whole CRM solution. So nothing goes to waste. So with those few remarks, Chairman, I may welcome you here. I also be telling Rugia to just try to test the solution. The bot is asking how it can assist you. So we are assuming you are the one who visited our website, and maybe you want to inquire about your technical statement. You also maybe want to find out about your claim. So this is the bot that should be serving you throughout. So with those few remarks, Rugia, no, Chairman, welcome. We may take a few minutes of your life. Rugia, you want to chat with the bot? So, Chairman, I just want to...
Thank you, MD. Thank you, MD. Thank you, Chair.
I think you appreciate that Kenya Re, for those of us who are dealing with, we may have had challenges. But with this new innovation, you can understand we are very conscious of making sure that our clients, our customers are happy with how we perform, and particularly in times of time. So I believe that what we have here will improve on our customer relations with our clients. I don't know how when the MD will be testing it, but I'm sure we shall all benefit with this new innovation.
Thank you, Chair. Thank you, Chair.
So, Chairman, I'll be asking, the assistant is there.
Yes.
He's asking how it can assist us.
Yeah.
So we can throw a question to it. Maybe we limit this to three questions. Just 3 questions.
Yes.
Yeah, could you please ask it that you want to do a claims notification? Yeah. Type on the chat, register claim notification. This is supposed to give us a form. You see, a claim notification form. What that means is, if you click on the claim notification form, please. So our customer out there, you communicate to us by sending some details to us that we receive and process for you. So this bot is a short for a robot or chatbot, will actually pick your information and bring that information to the backend systems, the CRM that MD mentioned, and then your data can be processed from there. Please close that. Let's quickly go to the next one. Another question is, I want to get an account statement. Get an account statement. So here again is supposed to pick your information. You can actually go through that information that the bot is going to ask you to provide is the information that you give us. The statement request form. actually contains the information. He will ask you for the information that you usually give us. So anytime you can launch this, and the bot can actually submit this for you. So the last question is, how many subsidiaries does Kenya Re have? Yeah, so this one is supposed to give us Kenya Re subsidiaries. Perfect. So you realize even after he made a mistake, that is where the intelligence is, okay? So even after he made a mistake in spelling the word subsidiaries and other words there, the bot was able to preempt what he's actually talking about. So thank you, Chair. That's a short demo, so our customers can proceed and interact with the bot.
I think with that, you can see we have launched this facility. And we do hope that it will definitely assist in our communication with you. The information flow will be clearer as you get this, start using this. So thank you very much for it. And thank you. Thank you. Our IT team keeps on getting better and better in terms of business. And we appreciate, we do appreciate.
Thank you, Chair.
Sure, thank you, Chairman. So we now have an extra pair of hands that should be able to serve you as and whenever you need us, as you can see. So this is Virtual Assistant, and again, behind the scenes, we have a layer, we have data analytics, but also a very decent layer of AI on it. So we are good to go to the next session. As I said, as I welcome Rugia and the team, kindly note my mentor is here, my supervisor is here, and also my colleagues. In my other life, I was also practicing IT a lot, especially cybersecurity. So we have some panelists who have worked with me before. These are ethical hackers. These are people, okay, who can do whatever they need to do in that space. But you are going to learn a lot from them. So let us open our minds and ears to this session. Karibu, Rugia.
Thank you very much, MD. So I want to give it back to MC now so that we can go to the next session. Thank you.
Okay, thank you very much. Definitely I'll call you back in a short while. But before that, we need also to set the tone for this, as we've done with the other panels. And I'm going to invite Professor James Njihia, Dean of Faculty of Business and Management Science at University of Nairobi. He's the one who's going to be setting the tone for us because innovation and tech is exactly what we've launched now. And of course, he's going to be, preempting most of what we're going to be discussing with the panelists who are going to be joining us in a short while. So karibu sana, Professor, to set the tone for us. Welcome.
Good afternoon, ladies and gentlemen. Honorable Catherine Kimura, Chairperson or Chairman, Group MD, Dr. Wachinga Hilary, who was, as you noted, he was my student, and board members, distinguished ladies and gentlemen, and especially our guests from all over Africa. We are really honored in all parts of the world. We are honored for you to be here, and I'm truly honored also to stand in front of you. I would not want to talk much about Dr. Wachinga, since he talked about me. Let me just say that when he became my student in MBA, we also became good friends because we connected as geeks, basically. I'm an information systems person, background in engineering, but I'm in the business school. I don't know why they made me the dean. But Honorable Kimura, I didn't do accounting or finance in my undergraduate. But we move. But what I want to say about innovation, on what I worked with Dr. Wachinga, was that I wanted him to do a very techie MBA, or say PhD, very computer science, which is his background. But he moved me towards innovation, something like that. So his PhD was on national systems of innovation. He can tell you about how to make the whole country work, why is Konza not working, and all that. So that diversity made me very, he also expanded my mind. So when you're a lecturer, one of the best things you get is you get to meet the best brains in your country, and that's what motivates us so that we keep going. Asante sana for inviting me. So let me move on straight to our discussion today. We don't have much time. The topic is about innovation technology for sustainable growth. When I was in the meeting with Ruga and his team, one of the team members there is a broker, and I asked him, now, why are you in this panel and broking is disappearing? Will there be brokers after these innovations? These intermediaries will all disappear. So if you're a broker, you better start reinventing yourself. I just thought of it immediately because really we must think about what we'd call pivoting. The insurance industry must pivot, similar to other industries. The banking did it very well. Movie industry has disappeared. Newspapers, I don't know what they're going to do. This is global, it's well known. But the insurance has been somehow there. And as noted in my comments here, in general, you find that the insurance industry doesn't have a good rap because of the points noted here. For example, a lot of hurdles, according to the Deloitte report, threats of recession, politics, high costs. You'll find that there's a lot of challenge which are there, but you find that the idea is that if they don't do something, they will not be there anymore. And you'll find that the last point noted here is that the idea of reinventing yourself to value realization. Now, you are connecting very many things. You're talking big words. What does it exactly mean? So the bits, how do they connect? There's a lot of talk in Kenya about IT, technology, but the actual movement isn't as much because you find that the actual uptake, just a minute. Oh, it's okay. Oh, this is backwards. Okay, allow me to learn it. Now, the actual uptake of insurance in Kenya isn't as much. They talked about 3% penetration. Why? It's well known, many of you are in the business. But one of the main one, of course, is poor attitude towards insurance and low penetration, no savings culture, low income, not good tax intensity. Like someone like me would have a lot of insurance products, but I don't have many because the whole game is complicated. The insurance sector in Kenya is very somehow chini ya maji, as I say in Kiswahili. Only those who know. The rest of us are outside. I teach, in my faculty there is insurance option. There are always about 7 students out of about 300 who chose insurance. Why? But those 7 usually end up doing very well because they always get a job immediately, but yet it never becomes popular. You need to unpack that much. What's the problem? They're all doing finance, they're all doing accounting, nowadays they're doing procurement. So there is that issue of the communication. But that one again is a business issue. Let's talk about now the topic for today. We're talking about sustainable growth. This is defined there. I think I'll not go into defining it. But what we want to note here is that essentially you're talking about you grow, but you don't eat yourself. We don't want to eat our children's future. Now, the insurance companies have their business to do, but then what we want to argue today is that you can grow, but also be sustainable, and clearly you cannot survive without technology. Obviously that one is well known to us, but why the Kenyan industry survives without tech, like now the car insurance industry, which we all pay, somehow I still have to call my broker, he emails me that paper, I print it, it's very annoying. When I was studying in the UK, I remember, that was quite many years now. We just go online. You put your car is already online. You pay online. The policy comes, and you can switch the companies very fast. Then they have a way they work together. So you don't have to like navigate, the systems navigate for you. And that was many years ago. What's happening with Kenya? It's a very locked kind of a system. I don't know why. But this is, what you're doing is about unlocking it. Now the key challenges, which are well known again, climate change is number one. This is the one that actually creates business for you. Are you actually, I think insurance should be celebrating climate change. More disaster means more income, isn't it? Is that correct? But just a thought. Of course, we also have legacy systems from an IT perspective. You probably have systems you're using, the competition, the regulations, cybersecurity as you mentioned. But then the last one on customer expectations is the one which you may want to think about, because customers today are not what they were yesterday. Because yesterday they would obey what they are told. Now they think different. So how do you address this? So you need to think about being more convenient, personalized, and also social responsibility. Now, these are the things that you are dealing with as a CEO and as an organization. And if you don't deal with them, clearly let's also note that when an industry changes, there are losers and winners. Some of you will not survive. I don't know if you are ready for that. Some of you will win big. And this happens in most industries. Technology leads to consolidation, leads to deaths, and it's disruptive. Disruptive means winning and losing. Just be sure you're on the right side of the game. I don't know if I'm correct here, but it's brutal, and that's it. However, overall, it's beneficial to society, as we've seen also in other industries. Specifically, we're talking about technologies like AI, as clearly put by our CEO. He already is using it. People talk about AI a lot, but you need to be specific. What can it actually do? Let's go down to the thing itself. In Kenya, we do have this hype, like when blockchain came, hype. I remember I attended one big conference on blockchain and IoT and what, but that was the end of the story. There are a lot of conferences. Where is action? Now, these are things you've heard of a lot, big data, that one, even everybody's doing that, analytics. But what exactly are we talking about? You are practical people. You have books to balance. Cloud computing is well known. Blockchain and IoT. Internet of Things is the one that can be a big game changer for insurance, because it deals with automating things even in the field, so that you don't have to send people to do assessors who call, they'll be done automatically. So let's speak on some of this. We'll go a bit more into them a bit. On the customer, you need to think about the customer experience. Maybe this is where insurance needs to think a lot about, because, well, personally, I've not had much problem with I always go through a broker. The brokers do a very good job in Kenya, to be honest, because they take care of us. I don't have to worry about the insurance company, because the insurance companies themselves tend to be a bit rigid. But the brokers are usually my friends, so they take care of my business. I think that's why brokers survive in Kenya. They actually do a lot for us. I'm talking about the customer. So, but then when you digitalize that process, what are you talking about? You want to have now digital channels, the websites, the mobile apps. You want to have the personal experiences and the faster claims processing. For us, this is basically it. A customer is not so looking for a lot other than just the experience. So how do you make this better? We've talked also about number one is for you to have good customer service, the engine behind is very important. That's the operational efficiency. This is your internal processes. Actually, there was a mention here about process automation. There's AI and robotic process automation. These are specific technologies you embed in your processes to ensure that you streamline everything. Like you heard about the fewer, shorter processing times. And they are already existing. It's just doing it. Data management with big data and fraud detection. Now, for insurance, these are important. And the point from a management perspective is that you get quality, speed, and better results. Of course, you also cut your cost. So these are like a win-win. It's not easy, but this is what you want. Bottom line is, you really don't have a lot of options as you move forward. If you don't do this, you will be one of those being eaten for lunch. You'll be the one on the the losing side. You really don't have an option. You know, I work in the University of Nairobi. We are on strike. Why? Because the university, public universities have failed to move on. The government has made them not move. So they are there, but not there. Now, this happens in all industries. Go to the banking sector in Kenya, who used to be the biggest bank. And these are the things that are driving even the winning companies. Insurance is where now, as this is a black box, but let's see what we can, what can come out of here. And this is a conversation that, everything starts as a conversation. Once you converse enough, you gel. But you need to think strategically, always. Now, on product innovation, now this is where the customer also comes in. If you ask any Kenyan today or any person, what do they want to buy from insurance? They don't know. They don't have a demand. I think there's no demand. What are your products? Maybe medicine, the doctors. Because it's kind of confusing to Kenyan customers, or I'm talking now as a customer. So what are these personalized products? Now, on-demand insurance using telematics and wearable devices, these are basically things that send data out to technologies and maybe constantly monitor the level of risk. For example, maybe in insurance, it's like, it's not fixed, but it's always varying depending on the risk assessed. Then there's insurance as a service whereby you don't now offer insurance maybe once a year, but people can subscribe to it so that it's on a platform. Now, I will not go into this so much. The panelists will talk about it, but the point I want to drive is that we talk this way, but specifically, what are we talking about? Can we put, like, you'll find always people talk about farmers, they sound good, but we don't find something at the end. So there's a serious need for this in Kenya, especially, whereby a lot of people are really not that advanced. They are not that, they're also broke. Is there really market? Well, what can you do to sustain, to wake it up? Of course, today now, finance and insurance are connecting. Probably there's a lot of room for that, where you connect finance and insurance much more, like they've done in other countries, because when you combine the investments, I think there's a lot of room there for that, in terms of, particularly in the area of risk management combined with finance, in terms of pricing of, say, goods and commodities, like farmers, when they are farming, they're always losing crops to rain. I know you offer probably products for that, but most people I know who are farmers, they are always going broke. I don't know why you are not helping them. I don't know. Now, these are just some use cases I got online. I just picked some few from examples. For the insurance pricing, there is an example of customized pricing by some organization. This is Metronics. They pay per mile insurance model using AI to assess driving behavior and adjust premiums. So premiums are not fixed. They depend on the driving behavior. If it's risk assessment underwriting, Swiss uses AI for detailed life insurance risk assessments, streamlining underwriting process. Again, these are just, of course, some of our friends abroad who are more advanced. There's fraud detection and prevention. I would say I didn't get much Kenyan information. Maybe they hide it, but I hope they are doing it. In the case of fraud detection, we're talking about Geico. I think, this is one of the large insurance, Allstate, sorry. They use AI tools for scrutinizing claims. You look at the claims, how they look. You can know which ones are fake, but you need to have the data set for your systems to have enough to work on and detect the patterns. And then, of course, in Kenya, we know there's serious fraud going on all the time. And that's why I think our premiums are high. So to me, this would be great so that you don't price me as a matatu driver or the boda guys who are always doing all sorts of things. Then coming to claims damage assessment again using AI, you can assess this using photos and videos of the damage. You don't have to, again, spend a lot of time. Then claims processing is automated. Then there is also automating business processes. These are all possibilities. Now, in terms of the challenges, these again are things that we need to keep in mind: privacy and security. The customer data is private. How will you manage it? Again, the laws in Kenya are now here with the Data Protection Act. Then the investment needed for the infrastructure. This is a lot of money. Is it worth it? You need to do your cost-benefit analysis. But of course, you need to move, but be careful. Regulatory compliance and cultural change. The last one might probably be the most difficult, because even today when you talk about insurance, you'll find that they always say insurance has a certain way of doing things. That's why we don't want to join it. It's like it had a history which it has not been able to overcome. I don't know to what extent it has overcome it. So this is something to think about. Who are the people in the industry? Where did they come from? What is their mindset? Who are your employees? What is their mindset? Of course, they start from these agents who sell things on the roads or in the offices. What is their mindset? Are they going to work with you? How will you fit them in? Or will you sack them? There's a lot. You can get resistance to change from any angle. Now, this is just a slide on culture. This is not specifically IT, but I always say that technology, when you have a system in your organization, it's as good as the non-tech side. If you have a good organization with good systems, your IT systems will also be good. But if you have an organization that is not well aligned with your business, like people who don't have the right culture, you will not have good systems. They will not allow the good system to work. They both have to be correct. So you need to invest in talent, clearly, collaboration, because when you connect with systems, now you have to work with many partners. A company like Safaricom, while it's private or public company, but it cannot choose to change M-Pesa today. That's a public asset now, in a way. So once you go online, you have to know that you are locking yourself to some extent with your partnerships. Then you have to embrace experimentation and foster a learning culture. I think the one on experimentation is the most difficult because it means it will cost you money to try different things. The point with this innovation is that you can't know what will work. The key is to have permanent small experiments going on. Embrace failure, celebrate effort, and don't punish people who appear to be wasting your money, as long as they are doing it with the right mindset. That's probably what Kenyans like to cut costs too much. No, let people experiment. Particularly the most brilliant people, give them some money, send them somewhere, come back after 1 week with what you have. Google always has this policy of having 1 day per week. You're not told what to do in the office. You come to the office, 20% of your time, there's no work, basically. But do something, be doing something. And that's why Google is permanently innovative. All innovative companies, like techie companies, always have that freedom. From what I heard today, like Safaricom, one of my friends was telling me Safaricom is now a tech company. It's not a voice telephone company. But it's because I think they have that culture of trying. I've met many of your colleagues. Now, this is a slide that you may want to think about. These are the things which you want to do, the ways, the trends. Ensure tech startups, the digital twins, whereby you simulate real-world scenarios using the data and all that. Microinsurance for underserved populations, very important for countries like ours. Pay-as-you-go insurance. This is where you can afford to go to a market that is not very, you don't have to charge maybe once a year, but people pay as they go. When they can't afford, maybe they don't need it permanently. Then for supply chains, you can have smart contracts based on blockchain, virtual and augmented reality for where you can use them to visualize things. But the point I want to make here is the graph you see there is called a hype cycle. The hype cycle is basically a chart that shows you what is going on in a certain industry and what people are thinking. Now, the slope, the first line you find there's a very high expectations. Everybody is hyped. But over time, there's a peak of, like all these things are not going anywhere. You are all excited, but where are they going? Then there's a trough of disillusionment. After that, people give up. This thing we were hyped, we were told to do blockchain, now it's not there. Then there's a slope of enlightenment, the one at the end. The last bullet there, I'm telling you that there are many opportunities for future expansion, innovation, but be realistic and careful of hype. You don't have to jump into every new technology. You can look for the Gartner hype cycle for insurance industry and look at what people are saying, but don't jump into every new technology. You'll lose money. Be careful. So technology has that issue of being sometimes too early. If you are too early, you'll be the one to take all the pain for everybody. The later, others will come and you've cleared the way. So be the one to be careful since you're also running a business with the shareholders. Now, this is just one of the last slides about the implementation. This is just practical. Once you do your analysis, you select the technologies and processes you want to target. You need to choose. Then be clear on the steps for integrating the new technologies, including the risks and benefits. Then the culture you build it, partnerships and collaborations, monitor and measure success and ROI. Basically, it means that you are now doing something specific. So it's a process and it's a culture, but leadership is critical. I think I'm happy your CEO is already reading from the front and the chairman. He was here talking a different language, not like a CEO, like a tech here. So let me end by just saying that this industry has an opportunity to thrive in this age. Obviously embrace innovation with a culture of innovation by fostering it, with clear, well thought out strategy and execution. Now, I've underlined the word thought out strategy, technology strategy, and execution. Execution is everything. So, and that's probably also where many of us fail, because if you have not very good workers, they will not execute. If you don't do enough homework, you'll execute the wrong thing. If you are doing something to copy someone else, it will not work for you. The issue is you differentiate yourself, work for yourself, and in the end, the winners will actually be those who have talk to themselves in response to the market. Don't look at others so much. Look at your own capabilities. What are you good in? Then you go to that. Because this is a market that becomes more specialized to some extent, but can scale because of the technology. And you'll see this in the tech sector worldwide, whereby you find that companies like Apple, companies like Google, you can't compare them to others. That's why they're number one, because even Equity Bank, which I think their CEO normally comes to talk to us, they don't try to copy other banks. They just do what they think the customer needs, they research and do it. They don't worry, no one else has ever done this. No, don't care about that. Just look at the last point I want to talk about is by Elon Musk. I like his reasoning. He reasons from first principles. What does that mean? First principles thinking means you look at the facts, the logic. If it adds up, you do it. Don't worry about what people are saying. He's now flying to space. We are now using Starlink. He's a crazy man, but he just talks to the data, to the facts, and he does it. Thank you very much.
Thank you very much, Prof, for those words. Quite insightful, I think. Spoken. Now we understand why maybe Dr. is saying that is the mentor. So you can, if you hang around them during lunch, you might be able to pick their brains on a couple of things. So asante sana once again for that. And I think we dive right in. That is the best way to set the tone for this next panel on innovation and tech. And our moderator for this, he was here earlier on, and I'm glad that he launched a product that all of us are very proud of. Although I did not know what it was going to be, confidence all the way. And this one is Samuel Rugia, Manager ICT Department at Kenya Insurance Corporation Limited. Maybe just to give you some of his accolades, Samuel is Kenya Re's head of IT, and he oversees delivery of technologies that will position Kenya Re as a market leader in its markets while meeting its strategic objectives. He is a data engineer and IT expert with over 15 years industry experience, skilled in designing, developing, and application of technologies in database administration, systems administration, business analysis, IT infrastructure scoping and management, data science, AI, machine learning, and IT in general to improve business processes, efficiency, and improve customers' experience through innovation and automation. He has a Master's of Science in Computer Science from University of Nairobi and BSc Computer Science and Engineering from Maseno University, a certified professional. I could go on, but he's got many accolades. So he's not chancing his being here. So let's appreciate our moderator for this next session. Karibu sana Bwana Rugia. Welcome.
Thank you very much, Larry. MD, Chair, Board, my colleagues, distinguished delegates, good afternoon. It's about time, but my role here is actually to protect you from the next panel. This panel is designed, it's a panel of experts, and we want to get deeper into the concept of innovation and tech. What can we do? And to set the mood for this discussion, I want us to have a certain mindset. By the end of the panel, we're going to ask ourselves whether we have the roadmap or not. I just want to thank Prof, who was here on stage. Remember the keynote speakers and the panelists met here for the first time. But when you look at the presentation that Prof did and the key points that the panelists are going to discuss about, you realize that actually these are serious experts. And the panel that is coming on stage is actually designed to connect two spheres, which we shall talk about as the panelists continue. So I just want quickly to watch a 2 minutes video on future of insurance tech, just to set our expectations. Proceed, please. Thank you very much. Okay. Simply what was in that video is that innovation and technology is not an option. And the next panel that I'm going to call on stage, the experts, will actually get deeper into that subject. We are saying that we have to innovate. That's simply the road that we have to follow. And insurance. In Kenya Re, actually, one of the visions of our MT is that we lead the talk in InsurTech. And there are things that we are doing, and we are connecting these two main spheres, the research and the industry, to make sure that we are able to come up with sustainable products for our customers, yourselves, and the market. So allow me to call my first panelist. This is from University of Nairobi. Dr. Lawrence Mushemi, please give him a round of applause as he comes in. Dr. Lawrence is a senior lecturer of AI, Department of Computing and Informatics at the University of Nairobi. He's actually led the discussion around AI and research for quite some time. He actually started as an expert engineer, and as you can see, he actually majors in artificial intelligence. Doctor, you can see it as I proceed. and is actually that is able to cut across the universities within the region. And this is universities like JKUAT, Africa Nazarene, and he heads a department currently at the University of Nairobi. So Dr. Mushemi is going to handle the topic of emerging technologies and what we need to do in terms of integrating these techs, especially the AI that he specializes in. Give it up for Dr. Mushemi once more, please. And the next panelist is William Makatiani. Can you join us, please? So William Makatiani is a risk expert. He's a risk specialist. He has actually founded a number of organizations. Currently is the CEO of Serium Limited, a cybersecurity firm. And he has also founded a technology company called Cybota Technology, Cybota, a tech company that actually, these are the companies that we call InsurTechs. He has over 17 years experience in ICT industry, and he has actually led numerous projects in that area of security. So give it up for Makatiani, Mr. William Makatiani. The next panelist is Mr. Tyrus Moturi. Please give it up for Tyrus as he comes in. Tyrus is a CEO and founder of Applied Principles. He has over 20 years experience in the industry, and he's also a cybersecurity expert. He has worked in several projects within the industry. You can see his academic credentials there from University of Nairobi, and he has several professional certificates that he has, including Cisco Information System Audit, and he has actually been very instrumental within the Kenyan industry in terms of assisting with security configuration. So kindly give it up for Tyrus Moturi. My next panelist is Isaac Maina. Mr. Isaac Maina has actually been in the insurance industry for over 25 years of experience. He has actually known all the corners of this industry, leading one of the biggest agents in Kenya for 25 years, and is as a technical underwriter as well, and he has a diploma in CII, that is the insurance professional courses. So for the issues to deal with insurance, we are connecting InsurTech with insurance. We are connecting insurance with technology. So Maina is going to shed light on from the part of underwriting issues. And the next panelist is Mr. David Kanyi. David Kanyi. Give it up for David, please, as he comes in. David Kanyi is an expert in financial sector and digitization at Safaricom. So I think even without reading the rest, you can know that he's really well acquainted in that space of 18 years in capital markets. He's actually currently is the senior manager digital finance services at Safaricom, where he's responsible for developing digital financial services with the goal of fostering a saving culture, empowering Kenyans and improving their financial health through M-Pesa. So the reason we have David here is actually to be able to dissect the use of mobile devices in insurance. So, gentlemen, we are set. Let me start by first thanking you for availing yourselves and bringing yourself to share your knowledge and expertise in your main fields that you've been working with. So I'll just ask you some quick questions, but remember you're not limited to these questions. You stick to at least a few minutes, 2 minutes to answer the questions, and then we move on for our audience. So I'll start with you, Dr. Lawrence Mushemi. Kindly let us know, what are these emerging techs that you're talking about when we referring to the insurance industry or insurance space?
Thank you very much, moderator. I think that's a very wide topic about being asked about the technologies in the insurance company. And I'm also cognizant that I'm in the middle of CEOs and very well-educated people. But if I give it a go, of course, we have the traditional AI systems. The AI systems whereby you have machine learning and the knowledge-based systems, which have been there for long. But also, that has now advanced. And we have now gone to deep learning. But before I explain a little bit of deep learning, we also have the analytics, which I think the people who spoke before me here have talked a lot. Now, a technology like deep learning, which I've just mentioned, is one of the buzzwords that is coming around. It is coming from machine learning itself, and it's an area that can be applied. But also another one that is there is generative AI, like the bot that was being shown here by our good MD. It could benefit from a generative AI, which if I have time, I'll explain further. There are also technologies that are related to blockchain, and these technologies, of course, is about secure file transfers. So I think the keynote speaker talked about why are insurance companies not speaking to each other? Or if I want to shift from one company to the next, why is it so hard? Maybe the answer to that might be IoT, because there is secure file transfers, so you can transfer information of one customer from one company to the next without much issues. Then there is also the issue of IoT, and really this is one of the big things that the insurance is heading to. Maybe if I get a chance, I'll talk more about it. But IoT is based on embedded systems, which are intelligent. So of course they help to capture data and so on, we'll talk about that. But it is one area that innovators can use a lot. Finally, we also have virtual reality and augmented reality. This is an area that insurance companies are trying to get into. Some of them have already got into that with some very nice results. So, moderator, I think there are many, but allow me to get it to that point. Thanks.
Thank you very much, Doctor. We'll move on quickly to William Bakatiani, security expert. From your experience currently in the market, what we are having right now, when you look at the insurance industry, what are the key risks that this industry is experiencing?
Thank you very much, Mr. Rugia. First of all, it's a great pleasure to be here, and I think it's a great forum for all of us to get to interact. So when you think about issues around risk and losses for insurance, I think the key one is really data breaches. A typical employee who leaves an insurance company today lives with a lot of data. When you leave and you move to another company, you're living with a lot of data. So data breaches are probably the highest. We've seen data privacy breaches also go up. So data privacy, we are now seeing cases where you have your agents collecting customer information through their phones. You have all this information that is being transferred without following the regulatory aspects of it. System fraud. When we talk about system fraud, we've seen cases where policies have been changed in one of these databases without the internal teams knowing how these policies were changed. We've seen claims where somebody actually went into the system. 3 years ago, there was a case where quite a number of insurance companies, somebody was able to get into the system and change the entire claims process, even some life policies. And these people were targeting individuals who they knew they were about to maybe pass, and they were able to go in and change some of that. So payment of suppliers, claims, and policy issuance. We have issues of ransomware. We're also seeing cases where data is getting encrypted And it just becomes a question of then what controls are in place around that. Then we have insider threats, and in this country, or rather in this region, almost 70% of the cases we see are driven by insider. There's an insider who aids in the whole process through payments and all that. The very last one that is now emerging as we start embracing relationship or be it outsourcing is third-party risk. You get, somebody is getting an API that is leaking information. You load these new services because somebody else has done it without putting in controls or maybe limited budget. So those are the main 6 areas that we see as risks for insurance companies in the region.
Thank you very much, William, for bringing that down. We move on quickly to Tyrus. We have seen industrial revolutions pop up and change the way we do things. Briefly mention about 4IR and 5IR, and what are the key aspects or concepts that actually pop out when you're transitioning from the two?
Probably just to demystify, as has been said here by the various speakers since morning and even yesterday, technology is a big, deep ocean. But just to give you a perspective of what 4IR is all about and 5 and all that, I want to take you back in time. In the 1700s, we had the first industrial revolution with the introduction of those, the cotton machines, 18,000s, the mechanizations, water, steam engines, and all that. Fast forward, 1960s, we are looking at electrification, electronics, silicon, computers. Further fast forward, now we are not moving in decade, we are not moving in century-wise, it starts coming down to decades. We went into the third revolution, which I just mentioned, for the computers and the systems and the big words and the geeks of IT and all that. From where now we are into the fourth revolution, what is being called the 4IR. And I'm just going back that so that you put it into perspective, because it will be quite interesting here. The fourth revolution started in 2016, just for clarity. It is characterized by disruptions. We've seen the Ubers, the hailing of cabs, which has had these other variations as we moved across the years. Just 2016, the other day, all of us, I believe, were already here. The other revolutions, maybe we were not there. Now, we are moving next into it. For 4IR, I'm just mentioning a few. We have Uber, we have Airbnb, being the largest hotel now. We have robotics. In Kenya, I think we just saw somebody brought in that maybe 1 or 2. The chefs that are serving food, we have the waiters. The concerns of if they are going to be replaced, that's coming in shortly. Now, we are looking into the 5th revolution, the 5IR, which is now going to be characterized, and we are at the dawn of it. Just between 2016 and now, we are at the dawn of 5IR, which is going to be more collaboration now between the machines and how we work. Those of us from here I mean Kenya, you remember the other day we had the issues to do with the T-Prackers, the automated T-Prackers, which brought in a lot of issues in the T-zones, and I think they ended up being with the drone. So the question is for that investor, if it was in your space, the insurers, that you had to withdraw some investments for having not had the human, computer, robotics, AI interaction properly done, what would have happened? Maybe for us it was just a wish away. We never bothered to know what happened to the investors within the T-zones. So just to give you a preview of what that 4IR and 5IR is all about, but we'll be coming back to it shortly. Thank you.
Thank you very much, Tyrus, for giving us that breakdown of the industrial revolutions. And you can see actually what Tyrus has mentioned about the last industrial revolution where we are right now. You can clearly see everything is changing. So we move on quickly to Isaac. And Isaac, our question today for you is, are strategic alliances between insurance industry, could be between broker, reinsurer, insurance companies, now looking at what is happening, are they recommendable?
Thank you very much for that particular question. I think what I'm going to talk about is what touches on you, the insurance people, the CEOs and agents like me. Strategic alliances can drive innovation within the insurance industry in several ways. First of all, myself, I have thrived in that particular ecosystem of strategic alliance. This alliance, if I was to mention a few, include issues like automation and integration of various platforms. Collaborating with various technology firms allows the insurance companies to integrate to new technologies, like AI and big data, what you have had here. And that is what will cause the first dislocation in the insurance industry. I would want you to imagine a dislocation in Fuliza. Fuliza is one aspect that came and changed how Safaricom works. It's a product that was researched and put in place, and it meets the needs of majority of Kenyans, 41.5 million customers who are in that at the time of purchase, you are able to buy your goods even if you don't have money within your wallet. If you look at the first 20 companies in Kenya who have experienced the dislocation, and you can Google them, it's only one insurance company which is there. And you can guess, all of you, who is that? That's Britam. Britam has been able to tie themselves into those automations and integrations and partnerships. And to an extent, because I work together with them, I know they are within that ecosystem. One of the areas that we need really to look at in terms of partnership is M-Pesa, who is seated next here to me. M-Pesa have 41.5 million customers. If we were to embrace that collaboration, we can actually be able to drive our products through M-Pesa and come out with a lot of products which customers have not experienced before. And I know that is happening, and my friend here is going to talk about it. Two, partnerships and that result from automation and integrations drives in what we call product diversifications. And from this point, I'm going to mention a few. Once you establish partnerships with people who have large volume of customer base, you are able to identify insurance opportunities and create sustainable partnerships that drives in the numbers that you want. But this partnership also, you need to look at the law. Tourism Fund was here. I don't know where she is, and she mentioned about partnership within that ecosystem. If all of you are keen to listen to what was happening in the Social Health Authority, the SHI, there is a particular clause inside there that has made travel insurance mandatory for all Kenyans who are coming, for all visitors who are coming to Kenya. How would we join with big companies like Safaricom and M-Pesa to make sure that we drive that product? Because it's a mandatory product. The problem we suffer is that we will not be able to sell that product, drive that product within that ecosystem because we don't have good technology or integrations for us to take advantage of that area. And for all of you, you can check on Social Health Authority Act, Section 26. It's very clear. That particular item is mandatory. We need to embrace technology for us to drive that area. Two, on the same SHI, you know what SHI is offering? It is offering outpatient, basic healthcare, outpatient, inpatient. It omits a particular component on the end of the human life cycle, which is death, which happens within the hospital. NHIF does not provide funeral. How can we collaborate with NHIF to offer that particular service, which we know has done very well in South Africa on that particular area? Then we have other areas like agri-value chains. I have seen a lot of value chains which has been talked here. And some of you have been involved, we have been involved with some of you, I have seen some people we have been involved together in development of value chains with the presidency on agriculture. Though it has not worked, but there is a good collaboration aspect within that area. Another area that you need to consider in collaboration is inventory, insurance value chains. All of us, insurance people, why we don't exploit those opportunities, I don't know why. We know the area of inventory financing has been dominated by banks. Supermarkets, where they go for large loans, financed by banks, to put in products from factory, from warehousing, up to stocking of the products within the ecosystem of supermarkets. I'm not challenging banks, but there has been a big problem within that ecosystem, and you have seen what happened to Tuskys, you have seen what happened to Nakumat. But do you know we can actually be able to provide insurance guarantee or inventory insurance for the value chains, and we are able to move those products as far as technology is concerned. We can actually be able to talk more about that, but Safaricom is already discussing with us on those particular areas. Another area for tourism for you guys to think on, collaboration, catering levy, tourism development authority. Any of you who takes lunch or who takes something from hotels, there is a 2% levy that is normally on your receipt. Do you normally see it? Do you normally see it? Yes. Take the receipt even now. See a 2% levy from catering. How can we build insurance? Because that levy comes out from a consumable item that you have consumed. I have consumed this water. Tourism and catering levy have not been able to collect that levy. We can automate it and put an extension for product liability. If I get food poisoning, we are able to get a payment. How many cups of tea are taken in this country every morning? How many pieces of bread are eaten from this country? Those are things we need to think through. I'm giving examples.
Yeah, I would like, that's very good, Maina. I would like to give you another opportunity. You tell us the remaining items, plus also the actual case studies where the strategic alliances have worked. Thank you very much, Maina. So we move on to David. David, you are talking about mobile technology, being in Safaricom, M-Pesa and all that. Do you think that a mobile technology can actually be used, can be used as an entity or a device that can be used to develop these sustainable insurance products?
So, thank you very much, and thank you for having me here. So many a times when we go to forums like this, where we are speaking to industry leaders, the question that comes is, what is a telecom doing in the middle of insurance industry? One of the things that we've been set up to do as a business is our purpose is to transform people's lives. And as we do that, we've moved away from just being a telco to financial services, and now we are a technology company. And as a technology company, we offer solutions. A bit of statistics. It's said that every minute, 79% of even the people in this room are looking at their mobile phones. Even right now, if you look around, you'll find someone on their mobile phone. It's a centralized place for engagement. And it can either be used for business, or it can be used to distract. But the fact that it's a centralized place where people can actually congregate and have conversation, it is one of the tools that we've decided to use. So as a business, we first and foremost have set up what we call a device assembly, so that we can engage more and pull more customers away from their feature phones into their smartphones. But having said that, the mobile phone has been used by Safaricom to revolutionize financial inclusion, for example. In 2006, we only had about 26% in terms of financial inclusion. And as late as 2021, that was about 84%, led through technology and innovation, through the mobile phone. So the mobile phone is a critical tool that we're using. Now, Maina has talked about our customer base, about 41.5 million customers. You can imagine from that, what we've created is what we call a super app that has, that brings together both consumers and customers to get services from that mobile phone, from the super app. And that is engagement that we think mobile phones can do to ensure that they bring in conversations around what you're offering as an industry. So the mobile phone, as it is an engagement tool, and it's critical in the next couple of years to see that that is where business will be going. I was actually telling my friend Maina here that as a broker, this will be the next broker. Probably the disruption is that everyone will be congregating here and probably will not have any brokers out there offering services, but the services will be here. And it's because of one thing. People are looking for that engagement. People are looking for do-it-yourself kind of activities. They don't want to be told what to do. They just want to have services. So it's upon us to go and build products that are speaking to our customers, that are human-centered, and that can drive that engagement and pull as much value for our customers as possible.
Thank you. Thank you very much, Kanyi. Gentlemen, I want us to wrap this up in 15 minutes. So I'll give you 3 minutes each to just do an application, kind of an answer to your area. And Lawrence, you just wanted to know, how can we achieve operational excellence from this kind of integration of the emerging techs when it comes to coming up with new products?
Yeah. Thank you, moderator, and also listeners here. Okay, let me start by saying I'm not in the insurance industry, but I do, of course, I'm in computer science, and I do teach a lot of applications that are related to that. But due to my nature of work, I've interacted with a lot of the insurance practitioners, and over the years, I've seen some of the areas where you can potentially innovate, and where you can potentially even automate your processes. Like, for example, customer care is one of the most obvious ones. It's a low-hanging fruit. I think that's one thing that even you saw here, that customer care is a low-hanging fruit. Then we also have business process automation. You must agree with me that from a customer's perspective, they get very tired filling those forms. And even from your managers and the workers there, that manual process is very tedious. And therefore, some of the technologies that I had mentioned earlier, and I can mention them again, they can be used for that. There is also issues to do with the bank reconciliation. During my working with you people in the insurance industry, I've seen that that's a big issue. Bank reconciliation. Also, claims processing is another potential area where you can automate. And even receipt and data allocation. So those are some of the areas, and of course, fraud. Now, apart from that, there are some other interesting things. Now, that is in terms of business processing automation, what I've mentioned. But you can go further. Like, for example, you can use technologies such as analytics to come up with interesting programs. I know there are questions. As a customer, I also ask myself, why don't you have a package that's suited for me or that boda person, just a package for him? And this is what you guys call real-time microinsurance packages. So why can't you make those ones for Kenyans, whereby you package or you create packages for low-income people, you create packages for people who are vulnerable. And I think that is one of the things that my colleague here said about Fuliza. There was Equity Bank with its, its financial inclusion. So I think insurance, you also have that as a big gap. Then I'll not talk about analytics a lot because I think time will not allow, including fraud detection and others. But I can talk about other technologies that you can innovate with. Let me, for example, talk about virtual reality and augmented reality. You see, what happens is that with this kind of technology, you have people that you call the claim adjusters. And sometimes you need to take them through a simulated environment. Just like an aeroplane pilot is normally taken to a simulator, you can also have these virtual and augmented reality. And I would encourage Kenya Re to take the lead on that so that the other agents can do that, whereby maybe the adjusters here, or people who are assessing, they can be able to see exactly what happened, take the person through what was happening, and therefore when they are writing down their report, it is more realistic. Allow me also to talk about a technology that's being talked a lot, but insurance has not taken it too much. But I think banking have taken it. I think the guy who was here, KCB. And this is the blockchain. Blockchain technology, as I said earlier, it allows data sharing. Here I can see the insurance, Kenya Re itself, speaking in a way that is secure, brokers, regulators, and so on. So you share the data about these people in a more secure manner so that banks can, insurance companies can start speaking to each other. I can also imagine the regulators, if they're in this room, they'd also like to see what is happening. So blockchain will assist the regulator to see what's happening on real time. Maybe the other one I would like to talk about is on generative AI, which, as I had said earlier, is an interesting technology because during my working with the insurance people or companies, I have noticed that you deal with a lot of data. You have bank statements which are in Excel format. You have a lot of emails coming from customers. You have bank statements. You have many, many, many documents that somebody has to, to comb through so that you can be able, for example, to reconcile, or you can be able to know how much claim is going into that. Now, here there's an opportunity. If you use generative AI, what we call large language models, LLMs, generative AI, it can do that for you. It can take all those emails and bank statements and everything, and all these things we are talking about, bank reconciliation and data allocation and all that. Generative AI can do for you that. So it goes beyond even the bot that was presented here. It can even do those other extra things. But to get there, we need, and I hope I'm not taking too much time, but we need a...
You can summarize it.
Yeah, let me just summarize it. We need to bring, now the purpose of this forum, I believe, is to create awareness to you that these technologies are there. The next step is we need to take the development companies, the tech dev companies, and institutions like the University of Nairobi, where I'm coming from, and then they can help you go through these solutions. So as a company, you don't have to be bogged in your mind. Just talk to the researchers in the universities, just talk to tech developers, and define this, work collaboratively, and these solutions can be achieved. Thank you.
Thank you, Daktari. I hope delegates, you are picking the questions because you are the ones who actually provide answers to the questions that Dr. Lawrence is asking, which are very key in coming up with new products. So, William, you talked about some serious risks that affect insurance companies in the industry. Can you just highlight for us at least 2 or 3 technologies that are currently being implemented to deal with the problem?
Cyber risk, really. The problem isn't, when you think about people process technology, we tend to think technology is the solution. So research every year, we do a report every year that covers quite a number of countries in Africa. What you found out is the problem we have in Africa with issues around cybersecurity, number one is around budgets. You want to buy this very expensive system, but you don't want to buy security. There's no, you can build a very expensive house in a slum area and expect not to have thieves if you have no fence. So that is a key one. Number 2 is reskilling. There is no way you can get an IT manager managing somebody who just went to school for the past 4 years and they went to school in 1988 and expect them to be able to understand some of the things that are happening. You expect them to take a whole day to finish a report. Meanwhile, they finish that report in an hour. So those are some of the issues that we need to address. The other thing is partnerships. When you get a vendor, you treat a vendor as a vendor, you have a contract, you finish, you go, but you want partnerships with this individual. So that becomes something else. And then there's an innovation phobia within the insurance industry. And what do I mean by that? Across the world, cyber insurance is the biggest thing that is happening. Our insurance companies are so scared to think about this whole issue. They would rather go to the London market, get something and see it 95%. Meanwhile, in this particular market, there are companies that are securing these organizations for the past 5 years, and they've only had 3 or 4 attacks of those companies. So there's a phobia in there that also ties to cybersecurity, which means when we think about things that we need to do as organizations, let's look at it and say it's a risk. After all, you're in the risk business. From the other side of things, data-driven insights. There's a lot of guesswork around cyber, or rather around security. There's a lot of guesswork. You don't know your risk, you don't know your threats. You assume since somebody else was attacked in Ukraine, the same attackers will come here. So there's better now data-driven insight, the risk quantification. There's things about real-time monitoring that we need to embrace. But going back to the main issue, if we can build cyber insurance products as an industry, there is uptake. People are paying huge amounts for security, which means a percentage of it can go towards cyber insurance. And it's actually frustrating for me as a practitioner that I cannot get affordable cyber insurance in this market. Meanwhile, these people have budgets for that. So when you combine those capabilities and some of these issues around culture, sorry, I'll add a point. One of the biggest challenges based on our research is any organization where you see claims fraud, policy manipulation, it has a cultural problem. And this is something we found from one of our research. In one particular organization, we interviewed an individual who had gone into the database and manipulated some things. And he told us, when he looks at what he does as a DBA, he earns $400 a month. But his boss, who comes in at 9 o'clock and leaves at midday to go play golf, earns around $7,000 a month. So the question I was asking is, if you had a dog, and you locked this dog in your apartment, you went away for 3 weeks, and you come back and you find the dog has defecated all over the building or the apartment, who would you blame? Would you blame the dog, or would you blame yourself? Ladies and gentlemen, the culture we build in our organization brings these ethical issues around issues like risk. And they will continue until we look at the value chain and the reward system so that the people who spend most of the time doing the work feel appreciated. So cyber risk in Africa is not a technology problem. It was before. Today, it's an ethical problem. It's also a rewarding system problem.
Thank you very much, William, for that brief answer to that question and very precise. Tyrus, now you mentioned a few issues that are emerging from that transition. How can we use that technology to come up with human-centric innovations to help the industry or the company that actually is embracing this steer end of the curve?
What is coming out is for those of us who are going to be sailing through these new technologies, as we've mentioned within these 4 AR and going into 5, we all know that for us in the insurance industry, our raw material is data. Data. You crunch data to do your predictive models and all that, to lower the risk, etc. So the question is, from where you come from where you sit, are you able to go through this type of rapidly changing environment? And we have very clear indicators in the industry. Maybe you'll be next. We have, as I mentioned earlier, Airbnb. We have these taxi hailing cabs now on apps. You still see the old ones. I think our car in Nairobi is, I think is 0 or something. But they are still there. There are those who refuse to move on. And there's no way, unless you're a very fresh visitor in Nairobi, you are going to pay for that year one at JKIA. You'll definitely have to go for the cheaper option. So for us is to, and for me is to just to encourage you to ensure you are able to sail through the aspects of these new technologies. Else, you may find yourself complaining, this policy has come in, this regulation has come in, the data protection and all that. We usually have, as a doctor here has said, we usually have reads in the industry, which you should create a channel within your organization. And as the industry CEOs, as the industry leaders, you must always give support to your IT or the innovation arm of your company so that you do get the best value for that. There are several companies, even very young techies coming to your companies to come and pitch for some solutions. That's the only way you are going to be able to demystify and adopt the technologies that are emerging within this space. Else, as my friend here, Makatiani, has indicated, if you are an IT graduate of 1980, the current technology is moving so fast. In my own house, I have a teenager, but I came to run a bit rate. We have 2 types of Instagram. There's the one that I'm supposed to see, but there's a private one which they discuss, I think, with their friends. So it's as simple as that. Even within the tech, you just have to sail through. Else, one company moves ahead, adopts, and swallows all of you. Where did Uber come from? It didn't come from the taxi people. Just somebody saw somewhere and saw the opportunity. Equally states the same here. Safaricom and M-Pesa, where did it come from? Somebody claimed, could be right or wrong, that it was his innovation, whoever it was in the Kenyan public. But it ended up in, we have it in Safaricom. Let me use those words. Maybe had it gone to another telco, it would be different. The innovation at Safaricom is top-notch. We have to applaud them for that. Now, are we doing the same within your industry? Drilling down further, are you maybe reading with that? There are some, just to mention, not in a bad faith, there are some seniors who may see these techie people as a nuisance. But for us here is to champion and really encourage that you open your ears, you open your doors to all those who come and pitch. Could be within cybersecurity. Myself, I'm within that space, but you always have to trend within the cyber growth. We have to check on the recommendations we are making in light of these new technologies that are coming up, not just giving ransom solutions. With that, I think I may want to stop at that based on time.
Thank you very much, Tyrus. Staying ahead, you have to constantly keep on updating yourself of what is happening around you. And due to time that we are given for this panel, Isaac, just give us one case that you know is very successful for the strategic alliances.
For a very successful case for collaboration, maybe you can allow me to mention 3, but I won't go into details. Okay. One, the most successful case for collaboration between insurance companies and collaboration companies is the risk-spreading partnership between the 3 insurance companies and the National Hospital Insurance Fund, which injected premiums to a tune of 120 million USD, or 12 billion Kenya shillings. The second most successful collaboration which is coming out is the collaboration between Kenya Re, Bismart, a company for tracking of containers, and Safaricom, where we have ushered the new single-use EAC custom bond, which is going to generate premiums within the EAC region in excess of 23 million US dollars. The third one, which will be the most disruptive and which is going to catch most of your insurances off guard, is the motor integration. For the first time, Safaricom has integrated the NTSA, IRA, and the road traffic. That ecosystem is integrated, and AKI. For the first time, you will not require to even seek for a renewal notice from your agent. The system will be able to remind you of your renewal, and the system will be able to penalize you if you don't have insurance by 10 minutes fall of midnight. 2, what is going to sort, what that whole ecosystem is sorting is a problem that we have never been able to sort in Kenya. 1, the NTSA database has 4.5 million vehicles. The current certificates, motor certificates in the ecosystem is 1.3 or 1.5. So the question remains, where are the 2.5 or 3 million vehicles? Are they on the road? Are they driving without fixed insurance? So for the history, integrating certificate to your team's account means that the system will know that you don't have insurance, even within a minute, and it will penalize you. Secondly, Safaricom is going to build a claims element of that area, and that ecosystem might sweep away agents and brokers in that particular ecosystem. And he will talk about it. The third one, which all of you need to think through, is the 222 account for eCitizen. In history, all permits, business permits, are being paid through the 222 account for eCitizen. So Kenya Re is going to build, for the first time, a treaty for fire insurance, that by the time you pay your license, we're trying to see whether we can engineer, instead of paying a fire license, you take insurance on a reduced treaty that takes all the businesses in Kenya to purchase fire insurance on a mandatory basis. And that is going to happen. So those are two, and there are many. Those ecosystems and partnerships are moving on. Safaricom will be able to tell you more, but we are collaborating together with the Kenya Re, and we believe that is going to change the insurance landscape as much as it can. Thank you very much.
Thank you very much, Isaac, for those case studies. And as we come to the end of this panel discussion, David, kindly tell us, how can mobile technology be used to come up with customer-centric insurance products?
So, thanks. I think we are privileged to be a fintech and innovative house that tries to look at where the problems are and simplifies the problem for purposes of getting the customer engaged and serviced. Innovation can be used positively and negatively. So we are seeing opportunities around, let's say, for example, local travel insurance, where you can actually do, someone who is boarding a bus from Nairobi to Mombasa and probably wants to alight in Mtito Andei can take travel insurance, IoT driven, and once it gets to Mtito with no incidents, it terminates. We are also seeing opportunities around wearables, where you can use wearables to determine the amount of premium you pay based on your health, how active are you, and then that data, as it streams in as a data point, can be used now to collaborate with the other data that we'll have to sort of provide a profile of the customer and give certain premium discounts based on your activity. However, some of this can also be abused. We have a case study in South Africa where we had this 78-year-old man who had a wearable, and he was getting very good discounts for his medical cover. Until when the insurance started asking, how come this man, he's 78, but he looks very active? So what the man would do is that in the morning, he would leave the watch with the dog. So the dog will run the whole day and count all the steps. Then at the end of the day, they look at this 78-year-old man has done 30,000 steps for that day. And of course, that's fraud. So I'm saying technology can be used in two ways. It can also build a profile and also can be used to perpetuate fraud. Thank you.
Thank you very much, David. Indeed, that is a culture issue. You find that culture actually comes in and into play in all areas. So distinguished delegates, we've come to the end of this panel. I know there are a few questions we would want to ask them, but looking at the time, we're definitely going to do this at another time. I don't think we have time for Q&A, but you can follow them and ask them whether AI is going to replace you. Because I know that's a question that runs into most of our minds. Is AI going to replace us? I also don't have an answer to that question, but maybe they may be having an answer. The transformational journey that technology has taken is immense. It's no longer linear. You can sleep today without technology and you wake up tomorrow with a new tech. So we don't even know what are the changes that are coming in. But we are very happy that you are able to take place in the panel. We hope to interact with you in other forums. Thank you very much.
Thank you very much. Before you go, as tradition, we are going to be presenting some gifts to our panelists, but also maybe just to put some context for our international guests who might not know some of the references that we were making with regards to NTSA, the 22 code. NTSA is the National Transportation System, and as he was alluding to that, on the system it shows that we only have a certain number of vehicles registered vis-a-vis the number of vehicles actually in the country. So maybe just putting some, for the context of the international delegates who might not understand some of the references, the 22 code is a short code that it's going to be centralizing like payment systems through mobile telephony and maybe others. So in case you've got any other questions that you want to clarification on, you can please just have lunch with them. I hope they're going to be around for another couple of minutes. So just sit down with them. You can put the questions directly also to address some of the challenges that they presented. And the questions that they asked you, maybe you might come and present to them solutions, and that is how we are going to be moving forward in innovation. Thank you very much. So if you can have the presence for our delegates, and once again, we're going to be requesting MD to come and present the tokens. Tafadhali. Yes. So they will get their presence, and then they will take a group photo together. And since this is a forum where we get to engage, please feel free to come and talk to them directly, even the other presenters and panelists from yesterday and today. When you're having lunch, just sit with them, engage, share experiences, so that you can be able to pick something and learn something from each and every one of us. I'm hoping that the panelists are going to be with us for lunch at least. Also, maybe I request Professor to come back on stage, since you are also part of this panel. Prof, since you are making the initial keynote. Sorry. A big thank you once again to all our panelists, and also the ones who are going to be coming and joining us in the afternoon for the final panel of the day. And just a reminder to our delegates for tomorrow, when you're going for the various excursions, in the morning, if you're going to the national park, please carry your form of identification. The registration, the team is actually handling it right now, but just in case, just carry either your passport or your ID card. And also the team that is going to be joining us for golf in the morning at Muthaiga, pick up from the hotels. The buses are going to be there from 5 o'clock. So depending on what time you're teeing off, you can be able to catch the bus to the golf course. And they will provide golf kits for international guests who did not manage to carry their clubs with them. You will be able to get some golf clubs at the golf club. Just wear your golf kit. I think that one you have. We don't have the sizes for everybody. And we wish everybody all the best. And in case you hit a hole in one, you might want to get golf insurance today before you go. Okay? So you're in the right place to get a golf insurance. So we take a picture, all of us. Thank you very much. Asanteni sana. Thank you very much, ladies and gentlemen. And we are going to be breaking for lunch. It is exactly 2 o'clock right now. We call it a quick lunch of 45 minutes. So if we can be back for the final session, so at least we release you a bit early, you can go and rest up and be ready for tomorrow. So tonight we're going to be releasing you a bit early. So we are back in the room at 2:45 so we can get started. Thank you very much. Bon appétit et à tout à l'heure. See you shortly. Yeah, for lunch, he's still at the same place.
Into the real business, allow me to now give you the proper introduction to the athletes and my colleagues who have accompanied me here. Please, if you can come up here so that they can actually see you properly. Please come, please come. And as you are coming, we are going to talk about one particular event because all of them represent one event called 800 meters. We decided to bring this to just to show the development of an event from quite a long time and so on. But of course, we have got so many others who are not here. And I'll be giving you the names of those who hold the world records later on in my discussion. So let me start with the oldest. And we are talking about Olympics here. All these are Olympics. So farther to my left, that is William Tanui, gold medalist, 800 meters, Barcelona Olympics. Barcelona Olympics, 1992. That's why I'm saying I start from the oldest. Then we come to the nearest here, because that is the next one in line. David Rudisha, 800 meters gold medalist, London Olympics 2012. Not only was he the gold medalist, he actually broke the world record, which he still holds, and nobody else has broken that record up to today. So he still holds the record of 800 meters in the world. And then the latest on the block is Emmanuel Wanyonyi, the gold medalist in Paris Olympics last month, just the other day. He is only 20 years old. Last year in the world, he was voted as the most promising athlete in the world because he was still in the junior level. He was 19 years. And therefore, he has actually proven that recognition last year was not out of nothing. He actually proved it in Paris the other day. And he also did the same last weekend actually, in Brussels during the Diamond League when he won the same event. The only lady who is with us here is Mary Moraa, again in the 800 meters. Mary Moraa is our best athlete currently in the women's category. He was a silver medalist in the Paris Olympics just the other day, and he was the gold medalist in the Diamond League last week. And therefore, all these have come through our program of youth development, because we have got a youth development program which is very, very successful, and that is why we can see all these here. So, ladies and gentlemen, thank you so much. I'm sure maybe later on we can invite you back here for either a discussion or a panel discussion. So, thank you so much. And therefore, to begin my discussion this afternoon, I know we have just come from lunch, so it is good to get ourselves going. And one of our athletes, who also holds the world record, but unfortunately she is not here today. She is in New York, in United States, for a special invitation for a special award. And that is Faith Kipyegon. I would like to give you a clip, a 4-minute clip, and you see how she broke that particular world record, that particular time. So let us watch.
Women's 1500 gets underway. Fast pace in stall. Fast pace in stall. 350.07 is the time she needs. There's a big...
Well, thank you very much. Now, that is, you have now witnessed how she broke that record, and she still holds the record of 1,500 meters in the world. Currently, she's, as I said, she's in New York for a special invitation. And maybe next time we will be able to see her either here or elsewhere. So Athletics Kenya was formed in 1950. So it is now 74 years old. Then it was called Kenya Amateur Athletics Association. This was formed by a gentleman called Sir R.G. Evans, and the first secretary, and Sir Derek Eskin, who was the president, then called the chairman. There have been 7 presidents since that time, and I happen to be the 8th one standing here today. So it's my privilege to come and meet you. And I currently serve as the 8th president of the Federation, and happy to note that I'm the first also Kenyan to occupy the office of the World Athletics as the vice president. Kenya's first international athletics competitions were, the first one was in 1952, as I told you. In 1950, it was started. 1951, we got our first constitution, which was then approved in London, where the headquarters was. But in 1952, we had the first outing event, what was called the Indian Auction Games in Madagascar. That was the first, that time there was no woman running. They were all men. And then the next one was in 1954, where we sent out another team to the British Empire Games in Vancouver, Canada. And they traveled very interesting, they took a very interesting journey from Mombasa by sea to Vancouver, and they took 31 days in the sea. And in 1956, we started our first Olympic outing in Melbourne, Australia. So athletics, therefore, is our undisputed #1 sport and a major export, if you like, from Kenya, just like tea and coffee and agriculture plus tourism. So we are the #1 sport here in this country. Today, in world athletics, all-time medal standing, Kenya is #2 and to the United States of America. You may recall that in the just concluded Paris Olympics, Kenya was #1 in Africa and second in the athletics events. Looking at our individual athletes' performance, they have attained numerous world records. You have seen one world record held by David Rudisha. The others are Eliud Kipchoge, who is not here. In the marathon, Ineos Challenge, you remember the 159. I'm sure you all are aware about this. Then we have just seen Faith Kipyegon, 1,500 meters. Then we have Beatrice Chebet in 10,000 meters. Then we have Kelvin Kiptum, the late, unfortunately, in the marathon. And of course, as I said, David Rudisha. Those are still holding the world records today. And such is the depth of our athletics talent and a pool of world-class athletes in Kenya and across the African continent. We also, of course, have our colleagues in Africa, like Botswana, South Africa. They also hold for Botswana, Tebogo, 200 meters. South Africa, we have 400 meters. Nigeria, the hurdlers. We have Ivory Coast or Cote d'Ivoire, in the 100 meters. And of course, quite a number of them. And therefore, I note that in Europe and America, we have insurers like Allianz that supports sports, with Allianz Arena in Munich, Germany, for football, and the Wanda Diamond League series in Brussels, in Belgium. So we therefore are together when it comes to discussion of this type, particularly when you look at the sports and insurance. And I believe by the end of this discussion here, we'll be friends, and maybe we'll have some colleagues discussing this in a more detailed manner. As industry drivers, this is your opportunity to invest in athletics that is extremely successful in Kenya and the continent of Africa. Take, for example, the amazing story of Eliud Kipchoge with Nike and Ineos. We believe and if you invest in what is thought to be impossible, on having a man run in a marathon under 2 hours. The project was breaking 2 Monza. He ran 2:00:25 in Monza, Italy in 2017, missing the target by 45 seconds. The same attempt in Vienna, Austria, in 2019, during the Ineos 159 challenge, with the mantra, "No human is limited." This time, Eliud Kipchoge delivered by running marathon at 1:59:40.2. The broadest of this event was in 200 territories with huge viewership online and TV. As you know, numbers do not lie. The Nike and Ineos projects are proof of business benefits of partnering with athletics, gives you a reason to come on board athletics and athletes as a tool or as a pool to drive your insurance product sales, while at the same time supporting the growth of athletics here and in Africa and maybe other parts of the world. The insurance sector, therefore, needs to connect, and this is the moment, time and place and sport to do so. The brand benefits and growth of business is guaranteed as athletes move masses to your products and brand. So I invite you all to engage us to develop a strong and mutually beneficial partnership with Athletics Kenya and our athletes. As I told you, we are already 74 years old and we are number 2 in the world overall. I'll be showing you also the medal standings later on. May I note that the sport of athletics has evolved over the years since the formation of World Athletics in 1912. World Athletics, or IAAF, those days called International Amateur Athletics Federation, was formed in 1912 in Stockholm, Sweden. Through the birth of athletics, as I have just told you again, in 1950, Athletics Kenya was born, and the modern era of science and technology in athletics continues. I believe and I hope you saw when Faith was running, you saw some lighting along the path, along the track. That is part of technology which is going on now. We now have innovations in shoe technology, athletics tracks, wave lighting, nutrition, training, and so forth and so on. These advancements are great for athletics, but also a challenge to us in Africa, as some of these things require investment, which is limited in effect. Governments may wish to support, but there are other competing national interests like health, education, and emergencies. To the insurance industry, this is your opportunity to plug in to athletics here in Kenya, and as I said, in Africa. Why am I saying this? The population in Africa in last year, 2023, was given as 1.48 billion people in Africa. And it's projected that in 2050, the projection is going to be 2.49 billion people in Africa. And in 2100, it's expected or projected that it will be 4.2 billion if the same growth continues to that level. So you can see the number of people we are talking about. Athletics performance of Kenyan and other African countries, that is, Ethiopia, Eritrea, Morocco, South Africa, Uganda, Nigeria, Namibia, Botswana, Zambia, Burkina Faso, Tunisia, Senegal, Ivory Coast, or Cote d'Ivoire, Ghana, and so forth, and all the others. They are all, they all produce very, very good athletes. So investing in athletics in infrastructure is such an area of opportunity for consideration. The longevity of our athletes, especially middle and long distance running, is special. Eliud has been at a world-class level for over 2 decades. From 2004 to date, Eliud Kipchoge is still running. He ran in the Olympics last month in Paris, although he did not finish, but just because he was a little bit injured. And so he has come a long way. Double Olympics and World Marathon champion. Faith Kipyegon, active on global stage since 2010. And she is now the world record holder. Triple jump champion from Nigeria and Diamond League is also in the field events category. And so on and so on. We have got David Rudisha, as we have said here, quite a long time. An event like 800 meters men has been won in Kenya athletics in the Olympics that I've just showed you here, from 1992 up to today. And so it's a very good development, and you can see how the athletes have brought all this together. And therefore, as I conclude, let me show you now the Kenya Olympic performance since 1956. I told you that we went for the first Olympics in Melbourne in 1956 as a country. And you can see in 1956 in Melbourne, we never got a single medal, whether it's gold, silver, or bronze. 1960 was in Rome, in Italy. The same thing, we never got anything. But 1964, in the Olympic Tokyo, Japan, we managed to get 1 bronze medal in 800, again, in the same event, 800 meters. So you can see why we are talking about 800 meters, and the development of such an event. Then in 1968 is when we managed to get at least 3 gold medals. 3 gold medals for the first time. And that is when the world started realizing that Kenya was a real athletics nation. Then in Munich, 1972, you can see we had 9 medals, 2 gold. 1976 and 1980, we did not attend the Olympics. For those who may not know, this was during the Cold War in the world. And there was a lot of world politics. And so we did not manage to attend those 2. 1984, Los Angeles, not very good, but we got 3, one gold and 2. 1988 in Seoul was one of our best because we got 5 gold medals, followed by Barcelona in 1992, where William Tanui won a gold medal in 800 meters. And then after that, we went to Atlanta, again in the United States of America, and we managed to get 8 total. And then Sydney in Australia, 2000. I happen to have been in that group. And again, we managed a 7. And then 2004, Athens, Olympics, 7. 2008 in Beijing Olympics, you can see 16, one actually the best that we have ever managed. 16 medals, 6 being the gold and the rest. And then London, 2012, where Rudisha broke the world record, which he still holds up to today. And that, of course, we had also 13. And then Rio de Janeiro in Brazil, one of our best, also 6 gold, and we had 13. And then Tokyo, which was supposed to be in 2020, but because of the COVID time, it was postponed to 2021. So it was actually not 2020, but it was planned for 2020 because Olympics come every 4 years. Every 4 years. So you can see Rio was in 2016, so Tokyo was supposed to be in 2020, but that was not to be. because of the COVID. So it was taken to 2021. And then 2024, which is the last one, we managed 11 medals in total. And so the projection is that in 2028, it will be hosted by Los Angeles in the United States of America. And we hope in 2032, it will be in Brisbane in Australia. So that is how the Olympics program goes. And so you can see our total standing is 38 in all those since 1956. All those is now 39 gold medals, 44 silver medals, and 41 bronze medals, making a total of 124. And that we are then number 2 in the world to United States of America as a country. And therefore, we hope to continue with our programs, particularly the youth program, because that is where we get our talents. That is where we discover our young athletes. That is where we nurture them, and that is where we now develop them into the senior category. And therefore, ladies and gentlemen, I say that I was going to be fairly brief. I don't want to bore you so much with a lot of other issues. But before I finish, I think just because we started with a clip of 1,500 meters by Faith, we also have the Environment Sustainability Program. And that is in 2021, we signed the United Nations Framework Convention here in Nairobi for climate change. And that is what you call Sports for Climate Action. That is when we signed, actually the day of signing, when we were hosting the World Under-20 here in Nairobi. And the next one, again, we attended the Conference of Parties 27 in Sharm el-Sheikh in Egypt. And we presented our report because we had already signed that document of United Nations Framework Convention on Climate Change. And then we also went to COP28 in, what do you call? Dubai. In Dubai. And we had a very good experience. And therefore, we become members. We have become members of that institution. And we have done quite a lot in the process. We have also, we had attended the Stockholm Plus 50 conference when we were discussing the issues of climate change and sports for climate action, and that is when we were discussing that. And then we have also attended the 77th World Health Assembly in Geneva to go and discuss about the health of athletes. What is the problem with the athletes? What actually affects the athletes? What health conditions? What are the best health conditions for the athletes in the world? Because you don't want to take athletes to where there is pollution, where there is that and, you know, and all sorts of things that can affect the athletes. By the time the athlete finishes to run, they are either coughing because of, you know, congested chest or blocked noses, and those kind of things. So carbon emissions also come into this. And therefore, we talk about air quality a lot. In today's world, you cannot host an international event if you don't have an air quality monitor. And so here in this country, we have installed, in the country alone, we have installed 5. And out of the country, we have installed another 7 in Ethiopia, in Tanzania, Zanzibar, Zambia, Senegal, and so forth and so on. So these air quality monitors are very, very important for the athletes. 2 weeks ago, we were hosting the Nairobi City Marathon, and we had to install 7 air quality monitors to make sure that the air quality is good for the athlete, and even mobile air quality sensors, so that we make sure that everybody is taken care of And of course, when we went to the World Health Organization summit, we also learned that World Health Organization says air quality sensor is not just for athletes alone, but it's also for the community within that general area. And therefore, it's important that we look at this together and we make sure that we have got healthy people and healthy community within our environment. And so this therefore brings in other lessons which touch on athletics, but of course it touches also on the communities. And so that is what we have done as athletics. By the way, we were the first. In athletics, world athletics, there are 214 member countries who are members of World Athletics, 214. Out of those 214, Athletics Kenya was the first member federation to sign the United Nations Framework Convention on Climate Change in 2021. And since that time, we have grown into what we are today. We are waiting to go to COP29 in, is it Kazakhstan or somewhere there? Again, to go and present our report. And therefore, I want to thank all of you who have supported us in this. I know we have visited quite a number of countries to go and discuss some of the issues and support. And so, I think that brings me now to almost the end of my presentation. But before as I said earlier on, we started with a clip of 1,500 meters women. Allow me now, as being gender sensitive, to also show you another quick clip of 2 minutes by our friend Emmanuel Wanyonyi here. He was the one running the Olympics in 800 meters. So thank you very much. Merci beaucoup.
It's always amazing that even when you know the end result, you still want to watch it until the end, yes? I mean, we were just told that he got the gold, but still, you still want to watch it until the end. Yeah, and it's a sport of centimeters and inches, and I mean, he started by saying that he's not going to be talking about insurance, but at one point when you're talking about issues of collaboration and finding those partnerships, he mentioned that Kenya was the first country to sign that accord on climate change. Kenya is a big country when it comes to issues of climate change. The past 2 days we've been discussing on all the challenges, and climate change has emerged at least in 2 presentations. So I think that it's something that is definitely to be explored. And the examples you gave with the Allianz Stadium and all this just shows that we can always find the synergies between sports, between athletics, between all kinds of sports and this particular industry. And of course, the best product that Kenya has to export, apart from our flora and fauna, is our athletes and our sporting fraternity. So definitely people to talk to, people to engage with. Please don't leave the room until you talk to them. At least take a picture home. So now I'm going to request our chair to come and issue a token to our athletes. And also, Lieutenant, if you can also join us on stage. Yes. And even as we are going to be inviting them on stage, since we are talking about the 800, the world of 800, the current record holder is still in the room, and I know he's always watching it. I know with jittery fingers. I know he wants a Kenyan to break the record, but he also doesn't want the record to be broken. It's a catch-22 kind of situation, and I don't know if we can find that clip of David Rudisha's world record. Is it somewhere there? I'm sure it is. No, so I'll request our athletes, just come on. No, maybe you want to watch yourself breaking the world record first. Okay, let's watch the clip first. We also want to watch. Okay, we also want to watch Mary Mora's race as well. Okay, we are going to do now. These are requests from the delegates. We have no control over this now. Brings out the child in us, it brings out the professionals in us, it just brings out the best in us. And I think it's being one of the best products you can export. It's definitely leaving us so many avenues to explore, and I wish that there's just a way we can explore this to the very maximum. Even in our small way, if we can do it, definitely we are changing the world in our own way. Now, this was a special request. She's just seated there. Now let's watch this as well.
Riki on the outside, Georgia Belton quickly as well, but look at Mary Mora go, just changes gear down the home straight. Belt's going to get through for second. Mary Mora though, 5 meters ahead of everybody else, 1:57.08. Well, she didn't panic when Maloney went with the pace. She knew what she was doing. She does this so many times, trusts herself, slows it up through that kind of second 200 meters, then gets moving down the back straight. Wiley did what I think everybody is saying you should do. Jump past Mora, don't let her do
Let's give them a round of applause, all of them.
See that she did that, but nonetheless, Mary Mora again.
So now I'm going to request them to come on stage to receive their award. Please come. Mary, Rudisha, Tanui, Wanyoni, please come on stage. We've got some, just a token for being here, and not only being here, but for, being Kenyan. This is the moment you're just very proud to be Kenyan. Love these colors, love this moment. And I'm sure as long as we have them around, you can just, pick their brain on one or two things. What goes through their mind on that last 200, 300 meters. 800 meters, one of the most difficult races. And I don't know if David Rudisha and Usain Bolt 400-meter race will ever take place. Everybody kept saying that it should take place one day. Let's give them another round of applause. I think the amount of work it takes for you to be able to run, that 4 minutes or that 2 minutes is quite immense, and we really appreciate all of you. We appreciate you deeply. And we definitely hope that the 800 meters stays in Kenya for very many years to come. Asivunje? Yeah, now the message is, I want you to make sure you take care of the world record. Now it's on your shoulders. The baton has been passed. If anybody else has to break it, has to be you. You take care of it. Thank you very much. Asanteni sana. Asanteni sana. Now, we've seen and heard on issues of sports and collaboration. And that is the key thing that we are going to be dealing with in this final part. That was just a way to motivate us to get into, get those thinking gears going for this next session of the panel. And it's about those sports collaborations. And I'm going to invite our keynote speaker, and of course, the MD has been up and down these stairs so many times. I'm going to request him one last time just to come and give us the keynote address, try to find those synergies between what we had as a presentation from Lieutenant, and also bringing it and tying it down to our core business. So karibu sana bwana MD, before we move on and invite our moderator and our panelists to close this day. Karibu sana.
I'm back again. How are you? How are you? After lunch, you are now awake. Our eyes are wide awake. Okay? So, just like my boss and my former bigger boss, the minister, when the CEO comes here, he is also at liberty to make some policy pronunciations. And we want to say, as Kenya Re, we want to get in touch with the president of Athletics Kenya, because we want to identify one of his best talents to be now global brand ambassadors for Kenya Re. So, Wanyonyi, Faith, Mora, through your president, will come for you. Will come for you. Yeah? Okay. We also want to make a commitment. Maybe some of you know we are quite big on CSR. Okay. We have a program called Nikofiti. And over the past 10 years, we have donated over 11,000 wheelchairs and other assistive devices to persons who are enabled differently, okay? Or the people, persons living with disability. So every year we run that program. And again, we want to get in touch with you, General, because we may also want to extend our capacity to Paralympics, because we understand most of the people who compete in Paralympics are military people who may have got injuries serving this country. So we will extend our Nikofiti engagements to that program. Lastly, again, as part of our culture change program, internally, we have been running a very interesting program over the past couple of months. And this is every week on Friday from 3:45 to around 5. We invite prominent personalities in Kenya and other countries to address our people. And that program is called Winners Mentality. So the objective here is to change the mindsets of our people to be winners. And again, for a person of your caliber, General, we may want to publicly invite you to come and address my people because you've been raising winners. It takes a man of your talent to identify talent, nurture talent, take it through national competitions to now a global champion. And Kenya Re intends to be a proper global reinsurer. So we'll be inviting you one of these fine Fridays. You can come and address our people. Thank you. And again, to follow suit with what you did, I may want us to start my presentation again with a short clip, a short video on collaborations. Okay, go ahead.
How can a big company like AXA offer you the best, most personalized and innovative services in a world where two guys in a garage have the power to disrupt a whole industry? Well, by working with the two guys, of course. In the past several years, AXA has created a complete ecosystem to facilitate work with startups at every stage of their development, whether they are looking for mentoring, funds, or a partner for distribution and insurance. How so? Once upon a time, Paul and Simon, two young entrepreneurs, had a great idea with the potential to make your life easier as a customer, but they didn't have the business experience, premises, or the money to move forward. Comet, AXA's very own startup studio, had the ability to proof their concept. Comet could empower entrepreneurs to help create tomorrow's disruptive business models and services and test their viability. For Paul and Simon, this was an opportunity to transform their idea into a real startup with the support of a solid company. But Paul and Simon then needed to raise funds to develop their newborn startup. After the incubation process, they wanted to launch it in another country and hire great talents. Here's where AXA Strategic Ventures came in. With its €230 million investment fund and offices in America, Europe, and Asia, AXA Strategic Ventures has the ability to put early or growth stage startups on a rocket launchpad. Several years have now passed, and Paul and Simon are leading a flourishing company. To further strengthen their business model, Paul and Simon can partner with AXA through AXA Partners and Digital Partnerships team. and offer on-demand and tailor-made protection services for their clients, integrated into a seamless customer journey. That's the story of how Paul and Simon lived happily ever after and had many clients. Now, of course, this is just a fairy tale. In the real world, Paul and Simon won't always experience all these stages with AXA. But thanks to its innovative ecosystem, AXA can build, support, or collaborate with great startups and become a trusted partner for its customers, available where and when you need it.
Very good. Sure, again, I may not want to repeat what my counterparts covered earlier in the morning. A lot has been said about collaborations, about partnerships. I may not want to go through that. Maybe to just mention two panelists who dwell a lot on this. The first one was Zain, and he said without collaboration, they may not be doing what they are doing in Pakistan. A lot of collaboration. Now, my friend Isaac Maina, again, hinted on a product that is a transit bond that Kenya Re has been working on for quite a while. So we are partnering with the Kenya Revenue Authority, with the regulator in Kenya, with Cedans, then with a technology company to roll out what we call IoT and Internet of Things to ensure that now we mitigate a lot of risks around transit bonds. And again, centering on making sure those are single-use bonds. So as you may know, most of these bonds were coming out of reusability. You could take one bond and use it like 20 times. So with technology, we are saying we are able to mobilize satellite, we are able to monitor you, we are able to ensure cargo is only transited through geofenced routes, and again, we are able to ensure you cannot use the bond once or twice. Okay? And that means we may see an upsurge in premiums on that area. So again, going beyond our capacity to tap into what others have, again, to grow business. And that now brings us to the issue of these partnerships and collaborations, which we are saying these are strategic alliances, okay, between players within the same industry or outside. And the objective here, the first one, is we may want to do what I've just said, product development that are beneficial to players beyond the traditional lines. We may also want to expand beyond our traditional markets. And this is very key, especially if you're entering a new market or trying to defend an existing one. Then there's the issue of risk sharing. We are saying we may need to pool resources as a risk mitigation. And this is especially very important where you have limitations in capacity. Then we have a lot of information sharing amongst us. This is a very big challenge in our industry. If I were to look at Kenya, for instance, around this time of renewals, okay, and going forward, when we are doing our retro placements, again, the biggest headache is data. We rarely share information. And when it comes in an uniformed way. So again, having a common repository where we can all access information is very important on the way we move forward. Then the issue of innovation. And innovation comes in many forms and shapes. We have just hinted on product innovation. We can think about process innovation. And of course, people-driven or culture-driven innovations. Then there's the issue of awareness. Again, it pains me very much to hear some speakers here, starting with my former lecturer, I know he has already left, saying they don't know much about insurance. Okay? And you can pinpoint that with accuracy, that this is the single most important driver of the low penetration. We need to unpack insurance. We need to simplify it. We need to make people perceive insurance as a necessity. So far, so good. People rarely know what you are selling. And when you sell, it's like we wait for them at the point of claim settlement to tell them you never read ABCD. And again, this awareness cannot be done alone. It takes all of us a contribution, individual effort, collective effort, to now grow this across board. And if you look at it critically, if we are to focus on this is quite important because of what I've just said, beginning with risk mitigation. You cannot go it alone in this industry. Then there's the issue of capacities. We see at times you may lack a skill, you may lack capital, like what we have just seen, those two young men. Okay? Again, you may lack a competence. Someone said you may be having IT managers, okay, who did IT in 1987, and your juniors are coming from university. Most likely you have no idea what they are doing. Okay? Again, you have a lot of innovation going on. But the industry, let me talk about the Kenyan industry, may not be that advanced when it comes to innovation. So we need to reach out to these young people. We need to resource them. Okay? And that informs what we might be doing next week. I'm very sure you have seen a lot of information going around. We'll be hosting our hackathon. And the essence here is to tap into the upcoming now competence in Kenya on AI, artificial intelligence, and robotic process automation. These young people are quite innovative, but unfortunately they don't have capital. So we need convergence if we are to gain from their innovations. Then we are saying if we are able to collaborate and partner, you can be able to speed up innovation. And some of these innovations, if you are to look at them critically, for instance, an innovation that brings efficiency, for instance, okay, can bring cost savings, meaning more profitability. Others can be on distribution. Like now, someone from Safaricom said, okay, you can easily now map micro-insurance to now a mobile platform in Kenya. And they're already doing it. So meaning through innovation, you can again be able to make a lot of money. But the debate today is, now as you make money, are you doing it for now and forget about tomorrow, or you're trying to do it sustainably and again responsibly? That is why we are here. When we are doing these collaborations, along the way you encounter challenges. So you may have regulations, laws, guidelines, recommendations that may really block the way we are interacting with each other. Especially considering our business like Kenya Re, we have multiple jurisdictions that may not harmonize the way they regulate. Again, you find now, again, the financial, for instance, a landscape is not uniform. You have bank assurance, they are still trying to understand insurance, and for them, they are more driven by money. You have an industry called insurance that we all believe that we are here to settle claim. That is our business. To a banker, that means he's losing money. So again, at what point do we have convergence? Then we have now the misalignment of goals, as I've just said. Okay? The drive here can be growing penetration, accessibility, affordability. But you are partnering with people who have other goals. So again, creating a common ground is very important on the way we move forward. Then there's the issue of data security. Okay? Again, we had data commissioner here yesterday. If you are to look at it right now, you can try to think about what we can call a nexus. There's a nexus between technology, privacy, and our business. Think about that. Okay? That you want to do medical or life, you are asking for very sensitive details, but along the way someone can come and sue you because okay, you used information, maybe they never gave you permission, or you took it and you assumed you are director, the writer, and shared it with an insurer, a reinsurer, for instance, and someone goes to court. Okay? So at what point do we converge and say we are addressing all these issues and going forward? I want to believe that is why we are here today. And again, the way forward here, we have no option. And for collaborations and partnerships to work profitably, sustainably, reasonably, we are saying we have no option but pool resources. Okay? Think about risk mitigation as a collaborative effort, not going it alone. Then we may also need to think about having a centralized way of accessing new ideas, all data, for instance, in Kenya. And forums like this ones to boost learning and development. Apart from that, there's the issue of co-creation, creation of value amongst ourselves and between ourselves. Then, of course, there is the issue of trust. In our business, if you don't trust each other, you may not achieve much. Then there's the issue of now surmounting the complexity of what we are doing and seeing opportunities out of that. We have many approaches to collaboration, and some are policy-driven by UN, for instance, others by government, for instance, our case PPP, and others are private sector-driven approaches, whereby you have a private company trying to tap into startups. The overarching objective of these collaborations, again, can be summarized into ESG. We are doing these to ensure environmental responsibility is there as we do our business. Then there's the issue of social responsibility and governance. But again, I expect the panelists to address this more. The emerging trends around this area of collaboration and partnership, surround technology and other areas that are shepherding now the way we are doing partnerships. For instance, if you are to cherry pick something like digital and technological partnerships, that can also inform the issue of blockchain and the issue of ledgers. Blockchain and decentralization of partnerships go hand in hand because we are talking about distributed ledgers. And among them, trusted way of information flow. And someone said, if these are properly done, in as much as we are saying we are collaborating, we may knock off some elements from our value chain. For instance, if blockchain is properly rolled out, we may not see agents or brokers. Because we are saying what is coming to us is from a trusted entity called Cedant. And what is going to Cedant is coming from a direct insured. So you may not need a go-between because you are saying these nodes are trusted entities. So again, these collaborations, when you map out technology, are going to be redefined from the traditional way of doing things. Then you have now a lot of alliances. And again, this is an ecosystem where we should be seeing a lot of innovation. And this innovation, again, I said, can be technological, process-wise, or people-driven collaborations. We have some case studies. I think one of them was highlighted here in the morning about a company called Lemonade. Now, they partnered with AXA, and the issue here was to try to inform the claim value chain, the entire value chain, by mapping AI. And the end game here was a reduction of fraud cases, and now the turnaround time. And we are saying we are going beyond this because there's a way you can throw in data analytics, which you are going to see, and now customize the claim settlement experience, a cedant by cedant, okay, or a broker per broker. Then we have the issue of another company where we are saying you are incentivizing a good behavior, okay, to push your sustainability agenda. In this case, we are saying you have cases where you can be able to now price accordingly, give incentives or lesser favorable price to whoever is embracing green energy, for instance. We are in this space in a big way. I think there was a panelist here yesterday from Ken Bright. I don't know whether they are still here. So over the past couple of months, we've been working on them on a green energy solution. And what we are saying is when you look at the traditional way of handling power, if you are burning coal, for instance, we cannot price you the same way with another person who is generating his energy from green sources. So to incentivize that, we are saying we can give you a lower rate than the one who is using fossil energy. Then we have another case here, and this is purely on technology. Again, thinking about underwriting process. I know of at least 2 big entities in Kenya that are purely using now robotics to handle underwriting. And we are saying if you are to use this emerging technology, we expect the accuracy of underwriting to really improve. Meaning in seconds, you are able to generate a quote or respond to an offer. Again, we expect turnaround times to be reduced. Turnaround times to generating quotes, turnaround time to processing. And of course, if you are to map that with payment systems, turnaround time in claim settlement. And I want to close this with a quote that should now jog our memory or our minds on the need for collaboration and partnerships, that collaboration is the essence of life. The wind, bees, and flowers work together with one aim, and that aim is to spread the pollen. So if you think about it, all of us here, we can claim to be those bees or flowers. The end game here is to do our business sustainably, reasonably. And that is where the spreading of pollen is coming in. Thank you so much.
Thank you very much for setting the tone, and I think I love that last quote. I'll be using it a bit more often from now on. Collaboration is the key to everything, and since you're talking about collaboration, we are going to move on straight to the panel, and this is going to be moderated by Mr. Abed Mureithi, who I'm going to request to come and join me here on stage, and he's going to be introducing his panelists. Mr. Mureithi is a Principal Actuary and Managing Director at ActServe Africa. He is the Principal Actuary and Actuarial Services East Africa Limited. He is a fellow of both the Institute and Faculty of Actuaries in the UK and the Actuarial Society of Kenya. He has over 20 years of experience in the insurance industry. He has advised a diverse range of insurance and reinsurance institutions across East, Southern, and Central Africa on matters relating to actuarial valuations, product development, IFRS 17, and investments. Karibu sana.
Good afternoon. As you've heard, my name is Abed Mureithi. I'll be moderating the session on partnerships and collaboration. Just to highlight some of the things that have been spoken by our speaker, Hilary. I think some of the key points that have come out quite clearly from his presentation is around technology and how partnering on the technology aspect is a way to go. There is also maybe perhaps other inter-industry collaborations. I think some of us may be knowing about Tesla Insurance and how they have adapted insurance for their Tesla owners. We have the likes of Apple and Google, who are using a lot of health statistics and information they're collecting. We've had ourselves here locally, Safaricom, supporting on medical insurance, as well as even some of the banking institutions adopting new innovations. And I think the gist of our conversation today will be in terms of how partnerships have been helpful in increasing insurance penetration and the like. And I'll be inviting my panelists. And to begin with, we have Mr. Zuhair of Apex Insurance Jordan, who will be joining us as our first panelist. He has over 30 years of experience. He's been running Apex for more than 10 years, since 2000, and it's now one of the leading insurance brokerage and reinsurance brokers in Middle East and also in Africa. Welcome. I'll also invite our other panelist, Beth Nyaga. Beth Nyaga is the General Manager, Reinsurance Operations. She's also had over more than 30 years in the industry, over 23 in the reinsurance, and has done quite a lot in supporting the growth of Kenya Re. Welcome, Beth. And I believe a lot in the African industry, of course, have interacted with her. We also have Mr. Nikhil Dodhia from the Principal Actuary at Zamara. He's had over 10 years experience, both in Europe and also in East Africa, and is a qualified actuary. We happen to be in the same profession. And finally, we also have Mr. Abiud Ogechi, who is the head of ICT here at College of Insurance, and has over 20 years of experience, and actually has about 18 years of experience in, has been here in the College of Insurance for 18 years. Welcome, Mr. Ogechi. So to start us off, I'll just maybe start off with a few questions, and I'll start with with Nikhil. So in terms of partnerships, what are the areas that you consider would be significant opportunity, especially in the InsurTech product space, for partnerships for insurers and the like?
Thank you, Abid. Thank you, everyone. So really, in terms of partnerships, when we look at it in the InsurTech space, you know, one of the things we've seen here in Kenya, especially, is when InsurTechs are entering into the industry, they don't have a full appreciation of the regulatory landscape. One good example is there was an InsurTech that entered the industry about 4 to 5 years ago, looking to change the value chain, looking to do something similar to what Lemonade was doing in the US. And when they came here and set up, they didn't realize, for example, that we had minimum capital requirements. The minimum capital requirements for a short-term insurer here in Kenya was about $6 million at that time. And the failure of that InsurTech was that they realized with only $3 million of funding, they didn't have enough capital to be able to underwrite the product, and then having to change their entire solution completely and turn into, rather than becoming an InsurTech, they essentially became a digital broker. Along with that, so it's really partnering with regulators to understand the regulatory landscape within a country. I would also say partnering with actuaries. You know, actuaries bring in good value into insurance companies. The profession is quite immature, I would say, on our continent. Outside of South Africa, we only have probably about 100 to 150 qualified actuaries across the continent. And partnering with, you know, actuarial professions across different countries can really help in InsurTechs coming up with sort of, you know, the risk reward for pricing.
Mm-hmm. Oh, thank you. I think well, that's quite useful, you know, about the partnering even just with regulators, even around product development and even the insurance space. InsurTech could have some regulatory challenges that need to be thought about. I'll probably maybe just also move to Mr. Zuhair, and you have been in the corporate world, in the insurance industry, and you have also been an entrepreneur founding Apex. Maybe just what would you you know, speak about what partnerships have done in terms of growing your business and enabling you expand to become one of the largest Middle East and Africa insurance brokers?
Thank you, Abid. I'd like to start by thanking Kenya Re, their MD, their chairperson and board, as well as their staff, for the great hospitality that they showed us over the last 3 days. This shows a great partnership. This shows that they are a great partner, and these are the type of partnership that you want to build over the years. Over the years, myself and Apex have been able to develop a lot of partnership. And I believe partnership has to be a win-win for all involved. Even in your partnership at home, even with your family, with your wife and kids. Sorry, the wife, she's always winning. It'll never be a winning partnership. The wife is always winning. It's all the same all over the world. But seriously, it's partnerships has to be a win-win all over, throughout the years, throughout the time. Sometimes a partner wins more than the other partner. But throughout the partnership term, it has to be a win-win for all. If a partner feels that they are at disadvantage, that partnership would not last. All of us, when we want to go into a partnership, with whoever it is, in our industry, the brokerage, usually our partners are both sides, the cedents and the reinsurers. We have to be fair to all. All of us have to be making end meets, making money, making a winning. Otherwise, it's not going to last. Sometimes the broker makes more than the cedents and the reinsurer. The reinsurer sometimes makes more. The cedents makes more, but it has to be on the long run. All of them have to be making money and having being successful. Otherwise, it's not going to last. If the cedents feel they are at disadvantage, it's not going to last. So if you want a long-term partnership that's going to last over the years, it has to be a win-win for all involved, and it has to be beneficial. When we go into partnership with our partners, the cedents, we have to add value. If we don't add value, there is no need for us. When we opened Apex 14 years ago, I remember people asked me, why did you start a new brokerage? And we heard the MD just said it just a bit before. Blockchain and all that stuff are going to almost take off the brokerage world, because you'll have a direct channels between the reinsurers and the cedants. If you are the right broker, nobody can take you out if you add value. And adding value, you need knowledge, experience, and you bring something to the pot. The problem we're seeing with a lot of brokers these days, they are copy-paste brokers. They receive the slip from the cedants, they copy it and send it across to the reinsurance without that much knowledge. If you add knowledge and you create experience, then the partnership will be a winning partnership. Thank you.
Thank you, Zuhair. I think there's something very important. You have said that partnership is about win-win for both parties. And that is what builds long-term sustainable relationships. Maybe moving on to Beth Nyaga. You can maybe, you've had a lot of years of experience in the insurance and particularly in the reinsurance space, have met a lot of people. What are some of the areas that you feel reinsurers can step in to support insurers? And particularly, I like what your MD has mentioned about the innovations that you're looking at, including the hackathon and the like, and even in product development.
Okay. Thank you, Abed. Sorry, I developed a cold this morning. So I will look at 4 different areas. The first one will be product development. This is new product development, and just earlier on, when Group MD was speaking, he talked of the new product, the customs board, the transit board, that actually we partnered with the insurance companies and have developed that product. So, and then beyond that, I would like to say that reinsurers also need to create capacity for specialized lines, the emerging risks. Specialized lines is lines like cyber, security, emerging risks in climate change, financial lines. So we need to, as reinsurance, we need to be very intentional, set aside budget for research, budget for upskilling, budget for technical training, so that if we are able to provide the capacity as reinsurers, then we can unlock the demand. So right now we are hearing a lot of conversation around cyber, and okay, as Kenya Re, actually we've created some capacity. We've set aside part of our budget to support that product. So that's something that we need to do more of as reinsurers. We can't keep sending this business outside the country. We must create capacity within our sector as reinsurers. So the resources, the technical training, the upskilling, and most of all, just being able to understand the product and being able to set aside mitigation, improve risk mitigation, improve the risk, make the risk better, understand, that is through a proper understanding, proper training. The other area is on risk surveys. You find there's some risks that generally that insurers are afraid of. We have fear about the risk. Yet, if you go down and look at the risk, you find it is a risk that actually we can retain within Africa. We don't need to export risk anymore. So I would like to say that actually Kenya Re, as the cost of surveys is usually quite high. So you find there's a lot of reluctance to do the surveys. And just to inform you that Kenya Re actually has also put in capacity. We have staff that are well-trained in risk surveys, and they're offering free services, free survey services. So just to give you an example, there is one risk that we thought we couldn't retain, but when we went to the ground, when the surveyor went to the ground, we found out that actually it's not such a big risk. A lot of risk improvement measures have been put in place. So that also will bring product penetration. Just a third area is on training, tech capacity building. So we need to train not just our staff, we need to train the market. You find that what is the most common product is motor because it is so easy. But there's fire, there's domestic package, there's a lot of other products. So we need to train the insurance market, collaborate, train the insurance companies, create capacity, create confidence, so that the the insurance companies have confidence to roll out those products. And then maybe finally, just allow me to say that from where I sit, I think growth, we've heard about penetration rates of 3%. But from where I sit, the growth, there's need for growth, of course, we appreciate that. But this growth is not going to come from these specialist lines. We need to deep dive as the insurance sector. We need to be available on social media platforms. I was just thinking that all these years, actually, I see a lot of advertisements on social media. I'm still to see a single advertisement on any insurance product, just coming in as I scroll social media. So we need to do more. We need to use social media platforms. We need to invest in training. Jointly, we collaborate with the insurance companies, so we are able to educate the public on the products that are available as insurers. You can imagine with Gen Z, we just realized, yes, we just realized that actually the youth, they're taking time to try and understand, read. So we need to just put these products, we need to put them out there and tell them about the products. I know there is bank assurance, but from where I sit, I think bank assurance is bank assurance, they still wait. It's a good thing, but they still wait for the customer to come to them. So we are saying that we need to be more actively out there. We need to be telling people, we need to be educating people, and that way we are going to create demand for insurance. Maybe the other thing is just to throw the challenge again, is to say that the two biggest banks in Kenya right now, which is the Equity and the Cooperative Bank, both of them, their growth has come from the micro sector. So I would encourage you, I would urge you, each one of you, let's think of ways, let's collaborate, let's have the proper content going out there to the social media platforms. Thank you.
Thank you very much, Beth. I like the 2 points that you have made about, you made them somewhere inside there about research and doing product research, and also about training even on products and even to the general public. I think those are very two good points. I'll then ask Abiud, you are in the training space as part of College of Insurance. Out of the trainings that have been there, what are the kind of opportunities you have seen that insurers can benefit from collaboration?
Thank you, Abed. In terms of training, I'll pick the cue from Beth in terms of training the industry. Our industry is one that has penetration of about 3%, and mostly it's because of how the industry is seen by the public. We've mostly depended on what we call products that have not been customized for the youth and the people at the bottom. So in terms of the opportunity that the college has to assist the industry move forward is first to adopt technology so that we can disseminate this knowledge to as many people as possible. And number two is to use the people, the youth, to ensure that they are able to understand what insurance and the benefits of insurance that are there. The other issue is to collaborate with the industry so that while we are coming up with products, we are able to do research together with them so that they can be able to have what you call adaptable products that can be used in the market. The other issue is to have customized training on emerging issues. College of Insurance has really gone out of its way to partner with people like AIO to come up with a leadership program, for example, that cuts across Africa. And this particular program will be able to train what we call middle level and senior level managers in terms of leadership. Also, the other part that College of Insurance has also partnered well is with the IRA on what we call Executive Certificate of Proficiency. This particular program for the people from outside the country was a program that was training 100 agents in every county. We have 47 counties. So we managed to train over 5,000 agents across the country. And this enabled the public, because we are training the people in each county on the importance of insurance. The other collaborations we've done with IRA is on training of the police officers. These are the people who handle claims, and they're the people who also manage whenever we have incidences on insurance. So if we do not train them, and if they do not understand how to handle these claims, we end up having issues to do with fraud and having claims that are not payable. The other opportunities that are there that college has to do with partnership on training is on internship, so that we're able to partner with the industry so that the people who we've already trained come out industry ready. And with that also, we'd like to partner with the industry on the professionals. They come back into College of Insurance to partner with us and disseminate the knowledge they have, and also partner with us on what we call customization of the courses, such that we have what we call industry-ready students. And on this line, we've partnered with Moi University, actuarial science students. Whenever an actuarial science student graduates from Moi University, they have a diploma in insurance, so they come industry-ready. And that's what has been lacking in the industry. So with this, we are able to bridge the knowledge gap. And also, we'd like also to request the industry on these new products and the gaps that exist in terms of technology training and also insurance technical training. We are available to customize these programs for them so that we can move forward and increase this penetration and the market at large.
Thank you, Abiud. I think you've mentioned, there's something somewhere you mentioned about, the Gen Zs, and the fact that perhaps maybe the banks are way ahead. You don't nowadays need to to go to the bank, but I think insurance is still very traditional to a certain extent, and yet the Gen Zs want everything, on the mobile, not even on the laptop, on the mobile. And I think you've put it quite well there about the sensitization that is required and the collaborations that insurers need to adapt. I'll maybe just have one last round of very short comments. Maybe I'll begin again with you, Nikhil. What, as an actuary, you have been involved in product development. What are the areas of resistance you have seen insurers having towards actuarial collaboration in the advice that you have given?
I guess the main area of resistance we find is usually on the pricing front, right? So when actuaries take data, we analyze the data and we come up with premiums that we believe should be charged in the market. But we find obviously fight back from insurers on the adequate premiums to be charging in the market. But that being said, we're also cognizant of the market that we operate in, right? If we look at most of the countries that we operate in, we all come from broker-led countries, right? So no matter what comes out of an actuarial model, if tomorrow my neighbor is going to go and undercut price, or a broker is going to set the price for a certain product in the market, it doesn't matter what the actuaries are going to come out with. And so I think someone was talking about, I think Beth had talked about collaboration, I think Zuhair talked about partnerships, and I think as an industry, if we can write healthy business, you can then have a more prominent and successful industry.
Yeah, I like that comment about things are broker-driven and pricing is such a big problem.
I wanted to say something about
Please,
that.
Yes.
Why do you think brokers are the problem? It's not customers, brokers, cedents, because why do you think price resistance is that bad in our neck of the wood?
I don't know, over here, for example, in Kenya, I'll just take as an example, is that today if an underwriter sets a price, a broker, because currently if we look at the insurance penetration is at 3%, right? Majority of our business is driven by corporate business. Today, if a corporate comes through, and most of the corporate business comes through brokers. So broker A brings in business A, has $1 million worth of premium, takes it to insurer A. Insurer A gives a quote. Company A tells broker A, that's too much, we need a lower quote. Okay, broker A goes to company B, tells insurer B that, listen, company A has got a price from insurance A, of $900,000 instead of $1 million. Can you match the price? Yes or no? Are you taking the business? Yes or no?
Yeah,
I agree with you to a certain level, but at the end of the day, it's the fault of the cedent if they listen. If they have a strong background and strong underwriting background, they shouldn't listen. I mean, I keep bringing live examples. At home, your son would come or daughter would come and tell you, give me $10,000. You give it to her or you give her $10,000? No, it's you make the decision. At the end of the day, the cedents who control the pen. Brokers don't control the pen. Brokers are going to play the game like we play. They will. We're not saints. We are looking for our own good, for our own commission. But like I said, if we are long-term partnership broker, we need to look at the benefit of all involved. Otherwise, it's not going to work. The equation is going to break somewhere, and everybody's going to hurt.
Yeah, I think what you have mentioned is quite important, that the cedant at the end of the day is the one who makes the decision and is the one who actually feels the heat of any poor experience that arises from the business. So I think, thank you, Nikhil, thank you, Zuhair. I think you've commented. I'll allow Beth maybe to make one more comment, and then maybe we can go to Abiud. Just one more comment, and then we can open up to any questions that may be there from the participants.
Okay. I think as a market, as the insurance market, we really need to work on just unpacking the products. And we need to have some good understanding of our customers. Right now we are hearing that most of Africa has a very youthful population. And the youthful population, they want convenience. They don't want to go out looking for insurance products. They want the products right on their phones. They want convenience. They want products that work for them. So there's need for I think, some flexibility, innovation in the way we have been doing things if we are going to have growth. Otherwise, we are at a risk of just continuing to talk of the 3%. I think we need to invest in research and just be able to understand our customers and put in place mechanisms to just be able to, we can have these products on the platforms, social media platforms, and then with pointers to our different offerings, and of course issues of data protection come in. This all will need to be taken into account. Yeah. So I would urge you, as we leave this evening, let's think through what we can do to just change the way we do things. Thank you.
Thank you very much. I think you have mentioned quite well, again, the issue of research and innovation, and especially adapting to the new trends. Abiud, you probably are a bit on a different space as your background in technology. Maybe just one comment that you can make about technology and its partnering in, how insurers can use technology. Yeah, just one comment.
Yeah, but in terms of technology, this is what I'd mentioned. For our companies, let's bring IT on the strategy table. Let's not put IT as support such that when you've already developed the product, you tell IT, now come in and see how to distribute this product. When you involve IT from the onset, they will be able to assist you in the distribution models and how these products will be customized to our dynamic customers that keep on changing every time. For instance, we have general insurance products that are priced annually, but our customers earn monthly. What makes us not adopt to a monthly premium product? And that just goes along on all products. So bring IT on board so that it can be able to assist you in decision making and customizing these dynamic products for the market that is coming across. This market, actually the market of Gen Zs, they don't take time. Their concentration levels is actually very low. So you need to capture them. at the spur of the moment as soon as that product is there. Then the other issue that I'd add over and above that is the insurance industry needs to create what we call a mentorship program that will enable now the young coming into the sector more energetic and giving more innovative products for the sector.
Thank you very much. And again, I like what you have said about bringing IT to the strategy table and not as a support function, which I think is what maybe happens in a lot of insurers, but I think that is a very good viewpoint. I think we shall open up the session to one or two comments. I don't know who will assist with the mic. I think you will mention your name and then raise your point, and then maybe we can take 2 or 3, and then we'll have some, actually even up to 4, and then we have some responses from the moderator, from the panelists, sorry, thank you.
Bismillah ar-Rahman ar-Rahim. I would like to have a comment on the discussion regarding the actual work, getting the prices, and what is the effect of the reinsurance broker or insurance broker on the business and the pricing and the competition in the market. The insurance industry, very important to have the role of the broker. Very important. They are it's integrated business between broker, insurance company, and client. The competition increased if the demand in the market for insurance is less than the supply. Okay? So it's a matter of how many brokers we need inside the market in order not to increase competition. So it's very important to have the role of the broker, but when you have in the market many brokers than the market needs, that will affect the industry in a very not in a good way. Okay? So it's a matter of regulator who should study the market and not to give license to brokers unless they will be added value to the market. Because if you have a lot of brokers, so the client will meet a lot of products, ask them to provide quotations, reduce rates to get the business. But when you work with a professional broker for a number of years, not only just taking your business, asking for quotation, but helping you to manage your risk, provide and plan your needs, what you need from the insurance products. That is the rare rule, or the most important rule of the broker. This is the professional insurance broker who introduce them to the reinsurers, who make a link between them and the reinsurers in order to sit together, understand each other. This is very important. Again, if we have in the region a lot of reinsurers, brokers, more than the demand in the market, it will be a severe competition. Thank you very much.
Thank you. Sorry, I didn't get your name.
Adil Fatouri.
Alif?
Adil Fatouri.
Adif?
Yeah, Adil Fatouri.
Adil. Oh, Adil.
Adil Fatouri.
Okay. So I think you're commenting more that using professional brokers is what is really needed in the market. And also, if there are too many brokers in the market, then it results in too much price pressure. Yes. And I think yours is a reaction, not a question. Eh?
Yes.
Pasi. I don't know whether there is any, but Zuhair can comment here.
I think Mr. Adil is saying that we need a strong regulations here. With the great actuarial work my friend here and the other actuaries do, you cannot control the market without a strong regulation. Too many cedents will ruin the market, too many brokers will ruin the market, because exactly what he said, supply and demand. There is too much supply, they're going to fight for the same cake. If 10 people fighting for one cake, it's not the same as 100 people fighting with the same cake.
Yeah.
So regulations need to come into play to force the brokers to be professional. Thank you.
Thank you. I think maybe, I don't know whether there is another, there's one at the end.
Listening to the whole presentation, first of all, my name is Bwalia from Zambia. So listening to the whole presentation makes me wonder, what is the role of the associations, the Insurance Association and the Brokers Association in promoting collaboration? Are we then saying these are only talk shops? Because I would think these industry associations exist to give a solution to this kind of discussion.
Thank you for the question. Can also take another comment. I saw the gentleman next can also comment.
Yeah, thank you very much. Mine is a comment about emerging trends. There was a lot of hype about blockchain when it came in. Other than in the issue of cryptocurrencies, we don't hear much more about blockchain. And this brings me to the area of the emerging trends and why I have not heard about the emerging trends when it comes to collaboration and consolidation, which has been talked about by other speakers before. This collaboration and consolidation would perhaps enable what they are calling captive insurance entities. I don't know what's your opinion about that, but it seems as if it's an emerging trend. And like Beth Mugo said, I think I liked her comment about we can't keep on taking business out of the country. In this case, we can talk about out of Africa, for example. What are we doing to forge those entities so that we can not, and I guess nobody from Swiss Re or Munich Re will consider me being unkind, but what are we doing to localize these businesses? What are we doing to prevent those profits from going out there, so that they are kept here and they benefit us? Thank you.
Thank you very much. We'll allow one more comment. I can see the gentleman, the fourth row. Yes.
Yeah, thank you. My name is Eliud Maderi. I'm a team leader at Bima TV Kenya. That's an insurance TV. I just wanted to make a few comments from the presentation. That one goes to Abiud after he spoke about the programs for mentorship and Gen Zs. We once held an event, and one of the feedback was that the industry does not give Gen Zs an opportunity to interact, to engage, and to even network. For instance, and this is also a challenge to maybe Kenya Re, an event like this, maybe we needed to have invited special, a number of Gen Zs, maybe from the college or even from the universities that we've been working with, so that they get to interact and learn it from our end, so that they can be able to influence at their level. The second issue is on the new risks and product development. Like she said, maybe, in my opinion, you find that we are all trying to look at the traditional point of insurance, and we're not listening really to the new risks that are happening. Like, for instance, you'll see that in social media, Kenyans are the highest users of TikTok, and so to say, just all the social media in Africa. And you'll find that we do not have products, maybe for social influencers, creatives, yet they have risks that they're facing from a cyber security point of view and even lifestyle issues. Maybe it's something that you can comment on and probably advise what the industry needs to do or what the industry is doing. Thank you.
Thank you. So I'll allow my panelists to maybe make a comment or two. I think there is the question on the role of associations. You'd want to take that? Okay.
I didn't get your name, sir, from Zambia. Thank you for asking the question. It's a great comment, what you said about the Brokers Association and the Insurance Association. Why do they have two different associations, as I understood? It should be one. We should, I don't know whether they're creating competition between cedents and brokers and reinsurers. It should be one under one flag, all working for the one cause, developing new products, getting better, getting the insurance industry out. My friend here just said that the penetration rate here in Kenya, 3%, probably somewhat high compared to other African countries, but still very, very low compared to the developed world. We all need to work together, not against each other. And I agree with you, it should be one association that houses everybody and works together to the benefit of all. Thank you.
Thank you. Maybe, Nikhil, I'll ask you maybe to comment about this new risks and new trends and how products can be developed. And I think there's products for social media influencers and the like, and what would be some of the considerations? Just your views.
Yeah, sure. So I think also one thing that a lot of people are looking at is what is the product that, or what one product within the insurtech space can also help us increase insurance penetration. But I think what people first fail to do, and I think I didn't catch that the young gentleman's name, was that they don't take the step back to understand firstly, why is insurance penetration so low, right? If we look at our market, it starts with trust, it starts with education, and then it goes on to products. Typically what happens is we look at emerging trends that are happening around us. We see that, oh, my neighbor has created a product. I'll give an example of telematics insurance, right? We talked about behavioral adjustments to pricing for different products. So telematics is if I drive better, I drive my car better, I should essentially get cheaper car insurance. We had an insurer in Kenya who tried to roll out a telematics product in 2019. On paper, you would think that would work, right? Because you're saying if you're a good driver, you get cheaper insurance, but it didn't work. It was a completely failed product because there was a lack of understanding of the market there, right? It was taking something that was working at our neighbors and not taking into context our own localities, right? What works for our own market. And I think that's one of the biggest issues we find with insurance penetration not increasing is we have a tendency to try and see what's working in other countries and then trying to bring them back here. If we look at a country like Zimbabwe, one of the greatest things that's happened there is a company called Econet, which is the equivalent of our Safaricom there, launched a mobile money product. Within their mobile money product, they've also loaded on insurance to help increase insurance penetration. And one of the options they've given people is, in Zimbabwe, funerals are a very big thing. You find funerals are really, really big. And what they've offered on their product is every month, when you do your monthly WhatsApp data bundle, you have the option to add WhatsApp data bundle plus funeral cover for 1 month when taking out your bundle. And that's one way that they've slowly increased insurance penetration. And by doing that, by having those small payouts to people, trust has also been built within the sector. If you look at Zimbabwe, I think Zimbabwe's insurance penetration has now grown to almost, I believe it's 9 to 12% over the last 5 to 10 years. So,
yeah, that's quite interesting. And I think you brought it out quite interestingly that, you know, if there was a Safaricom representative here, there's an idea they can pick in terms of a trend. I'll maybe ask Abiud, there's a mention about blockchain. And I don't know to what extent you would think that blockchain can be applicable in insurance, just your views on that.
In terms of blockchain, this requires an employment of collab. First is for the companies to digitize the data that they have for their products and customers. Can give out analysis and information for better decisions. As soon as we do that, then now we can move to the next step where companies collaborate, because the essence of blockchain is can be used by another company through collaboration and partnerships for better handling of the customer and also for product dissemination. So it first starts with us digitizing and employing whatever products we use. Then now we move forward to now collaboration. And in Kenya, I think through AKI, we have the motto that I've seen it work well, where they share data about motto. I've heard that Kenya Re is now partnering with NTSA. That will enable now have a semblance of blockchain where we have the data working for us for better solutions and better product dissemination. And maybe I can add something in terms of mentoring that was asked about mentoring and Gen Z involvement. This calls upon companies to involve what we call our new entrants into the market by involving them on the decision table. We are moving away from what we call 8 to 5 employee to a gig economy. These youngsters prefer what we call gig economy. And from that point of view, we should be able to find the best way to use them to give us better ideas in companies. And this can be done now through mentorship that we are saying through College of Insurance, where they come and mentor them from the point of training, and as they move out to the market, they should be able to be better people for the market.
Thank you very much. I think what you've said is adoption of technology. I believe the insurance industry has a lot of information that they are sitting on and yet not yet utilizing effectively. And I think there is a lot of opportunity in that. I'll maybe just have just one last comment, maybe by Beth. There was the question around there is a lot of reinsurance premium that seems to be not being in the market, not being captured by the local reinsurers, especially because of the captive kind of arrangements. What would be your comments or views around this and the fact that it's maybe viewed as an opportunity for growth?
Okay, thank you, Director Kirika. So about the reinsurance premiums being exported out of the country. So as I said earlier, that we need to be very, very intentional about retaining those premiums within the country. So the question is, what does this entail? That's the first question. What does this entail? And I think the first thing is to understand the risk. Understand the risk. So we need to invest in technical capacities to understand the risk. Somebody who can be able to do a risk survey, be able to map the risk, be able to pick out the red flags as far as the risk is concerned. Then step number 2 is risk mitigation. How do you reduce the risk? How do you manage the risk? So you find in most cases, what needs to be done may not even have very high monetary impact or financial impact to the company that is involved. And even if it had, this is where we are talking of collaboration between the reinsurers and the insurance companies to improve the risk. Then after we improve the risk, we are confident. Most times we are confident to retain a little more. And even if we are not, as much as possible, we should not be quick to export our premiums outside the country. You find quite a bit of premiums is still going outside the country. I believe between insurance companies and reinsurers, we have the muscle to retain most of the risk that actually we are even currently exporting. Maybe let me bring out the issue of specialist risks that I said we need to also invest in. Capacity building, understanding the risk, mapping the risk, understanding what the risk is all about, and not being shy to set aside some part of our budget just to upskill so that we are able to take on that risk in the future. We should not just be very, very quick to just take the risk away. You find, yes, that might be possible. Sometimes capacity out there is not even available. And sometimes when it's available, the costs are very high. The issue of captive, yes, it's a good idea, but what I'll say is captive cannot grow very big. If you really want to grow as a reinsurance company, you need to externalize the risk and also bring in other risks, because reinsurance is about spreading the risk. The problem with the captive, the biggest challenge is the concentration of the risk. So you have risk concentration. If you have a big risk and you're within the same group of companies, then that means your financials are quite exposed. So I would suggest that very captive may not be the right way to go. Thank you.
Thank you very much. I hear what you have said about the captives, and perhaps maybe not being the way to go. Perhaps maybe just for further thought, some of these large corporations may feel justified because of benefiting from the share of profits. But I think it's an area to think about and to innovate, and especially as things move forward. You will allow us I'd want to thank first and foremost Kenya Re for this opportunity to host this event. I think it has been a very useful one. I also want to thank the panelists for the very insightful comments and thoughts that have been shared. Much appreciated. You will allow me then to hand back over to the MC, then to guide the next steps, and including the appreciation of the panelists. Thank you.
Thank you very much for that insightful session. And of course, I'm going to request our team once again to come and present these awards to our panelists. And of course, Bona MD, once again, your presence is required. This is the last one, we promise, until tomorrow evening. So thank you very much to our panelists for such an engaging discussion. I definitely hope that we managed to pick up some lessons, some questions, and our key takeaways, even as we go back to our various destinations, things that we can actually implement to respond to some of the challenges that we are facing. And we'll start with Abed. Asante sana for that moderation. We hope that you can be able to see that animal you are holding tomorrow morning. If you are going for the excursion, be on the lookout for the lion. And just a reminder that tomorrow morning, the buses from the various hotels, pickup will be as early as 5. That's the best time to go and see wildlife. Be in the park by 6:30, when it's still a bit chilly. That's a good time. And also, people who are going to be attending the golf, you know your tee times, or they're going to be communicated to you. In case you need to borrow kit, those are the clubs to play with. You did not carry yours. We're going to get some from the club where you're going to be playing. So just let us know exactly if you have any particular needs for golf kit. Then we're going to be furnishing that from the club. And once again, pickups from the various hotels. In case your tee time is early, buses will be ready from 5, so you'll just get onto them depending on what time you're teeing off. And just a reminder that once again, it's a members club, and all golf club rules still apply on use of mobile phones on the course and in the clubhouse. You know these rules, so we try to stick to them as much as we can. Okay, so we will all stand just for one group photo together with our trophies, even as we come to a close on this third day of what has been an engaging summit. And we definitely hope that in the years to come we can be even engaging more and more trying to see if we found solutions to all the problems that we've highlighted today. Asanteni sana, thank you very much. Un grand merci à tous pour votre participation ce soir. Thank you very much for all your participation this evening. It is much appreciated. So you have a free evening today. And remember, tomorrow morning, bright and early, either you're going for the excursion, you're going to be picked up at your hotels, or you're going for the golf, look at your tea times, and then we will be all having dinner at the same place at the Muthaiga Golf Club in the evening. Okay? So if you're not doing either the excursion or the golf, and we're going to be there in the evening, that's where we're going to be having our last gala night dinner. Asanteni sana. Have a fantastic evening ahead. Thank you very much. And bonne soirée à tous. Merci. So we still have a bit of tea in case you need to network finally and just ask some questions from our panelists for the last time. We have some tea that is served and enjoy. Thank you. Just a moment. Those of us who might not be there tomorrow can be able to benefit from our takeaways from yesterday and today. Karibu sana Bwana MD. I promised I was going to call you last. Now this is the last time, I promise, for today.
Wow, wow. So we come to the end of this summit. That is a 2-day summit. And I'm very sure you know what we are doing tomorrow. Now, with all blessings of my boss, allow me to close this summit, the 2-day, today. As we now part ways, some of our guests are leaving Kenya immediately after this, starting with my friend here. So again, allow me to go to my not so long speech. Okay. So Honorable Catherine Kimura, Group Chairman, Kenya Insurance Corporation, board members present, distinguished CEOs and MDs, ladies and gentlemen, good evening. Allow me to start by asking each and every one of us to give a hearty clap for ourselves. We did well. We agree we did well. You have been an exceptional audience and the panelists for the last 2 days. You have done a good job by providing us with insights that I know will help carry our industry forward. I know you have noted the emphasis we have placed on collaboration because no one can do it alone. Everyone's contribution make a step towards the goal that we want to achieve, and that is to provide stability for our people, even in difficult times. Ladies and gentlemen, allow me again to acknowledge the sponsors for this summit, starting with our platinum sponsor, JB Border. I'm also thankful for the bronze sponsors, starting with our host, College of Insurance, then Dynamic, Safaricom, Marine Cargo Section, then Ken Bright Brokers, we have Apex Brokers, we have Cooperative Bank, and also receive support from other brokers, that is Afroasia, Zamara, then Gulf Bank, Equity Bank, First Three Brokers, Global Bara 3, Kenyan Alliance, Monarch, CIC Insurance, and Madison Insurance. We also have contributions from the last moderator here, Mr. Abed. He owns a company called AXAF, and they gave us, again, a bronze sponsorship. We have others, that is the largest banks in Kenya, that is Kenya Commercial Bank and NCBA. We wish to invite you to continue sharing the knowledge and experiences through our academy. We have what we call Kenya Reinsurance Academy, which we launched last year in September. And through this academy, we have trained over 3,000 insurance professionals in Kenya and out of Kenya. Positions agreed during this summit will be summarized and shared with you, and we intend to track this going forward because this will be an annual event. And we want to announce that our next year's event will be held in Kampala. So the policy positions, thank you. So the insights, the positions you have agreed here will be tracked the whole year, shared with the regulators and other stakeholders like government. That is why we invited government here. And we request you, when you go back to your countries, try to communicate the same with your policyholders, the makers of your policies back home. So again, when we converge in Kampala, we'll be hosted by our regional manager there, that is Tadeo Subuga. You can just stand and wave. So that will be our host next year. And we intend to host this event annually, first starting with all our physical subsidiaries. That is Uganda, the next one in Ivory Coast, then Zambia. After that, we go to Dubai to ensure we represent the entire Middle East, and India, that is Mumbai, to ensure we also access the entire Asia. Okay. For those traveling tonight, we wish you journey mercies. May God be with you. We look forward to meeting with you again. As we close this summit, I encourage you to join us tomorrow for the excursion and also for the golf tournament at our PGA-rated golf course, that is Motaiga Golf Club. I hope to see you again over and over as we perpetuate and continue our collaborations as business partners. You have visited our country. We look forward to visiting yours. And again, let us do this together. You cannot do it alone. So again, may God bless you and enjoy your evening and your stay in Kenya for those who want to leave, to remain behind. And for those who are traveling again, may God be with you and journey mercies.
Thank you. I think we had the closing remarks, but just one clarification. I know we were talking about the excursions for the national park. Due to public demand, some people have said if it's possible to be picked from here, because this is a venue that everybody identifies with, it is very possible. Just know that the pickup is going to be at 5 a.m. So bright and early, okay? If you're going to the national park, that is. Sawa, thank you very much. Have a good evening. Bonne soirée à tous, and see you tomorrow. And those traveling back, travel safe. Thank you.